All right, guys. Now I gotta Google this. Yeah, rest in peace to Charlie Munger. Hey, bro, he was 100, basically. He was 99. Man, my guy was 33 days, 32 days away from 100 years old. Money will make you live a long time. So, yeah, Charlie Munger, who was Warren Buffett's right-hand man, passed away yesterday. All right, guys. So, all right. Yeah, so market's actually gapping up a lot today. We're gapping up to 456, almost 457. Nvidia up to 483. Apple at 190s right now. Apple kind of had a flat day. It didn't really do that much. Um, Tesla up big ahead of this delivery event. Do you think Dixie News will be positive or negative? I'm assuming you mean GDP news. I'm not sure. GDP data is expected today. We'll put a poll up. Hold on. All right. All right. So it is expected at GDP first revision expected at 5%. Uh, Let me get some music playing. All right. All right. We're going to do a poll here like we always do. Does GDP come in higher or lower than the 5% expectation? So we're gonna say higher or lower. Go to the poll. Let me know how you feel. Uh, Man, my equities portfolio is looking good though. Yeah, today's GDP first revision. Let me get some music playing. Hold on. Poll, not Powell. My southern accent's not that heavy. You know, like sometimes us here in the South when we say oil, like in like Kentucky, it'll come across as like oil, oil. You know, but I'm from Louisiana, so we just say oil. You know, and go get some oil. Um, that's more of like a Kentucky thing, like a little bit northern, south. You know, uh, but yeah, vote on the poll. We got the poll live. Um, yeah, honestly, the Nasdaq's up. The Spy is up really heavy today. That's great. Q up to 392, so the Nasdaq's up. My portfolio is pretty green as well. I'm not gonna say I told you so. I'm not gonna do it, but I did. You're welcome. You know. Yeah, it depends. There's a lot of people that say oil. So yeah. GDP data. I'll put a timer up as well. Put that up. We'll put a timer up as well. All right, so it's 5:40. It's 6:45. So that means we got an hour and 45 minutes. Put the timer up. John, did you hear about GameStop taking over SantaCon? There's going to be hundreds of people dressing up as Roaring Kitty and stuff like that in a few weeks. GameStop could get crazy with that in earnings. Yeah, GameStop earnings are next week on the 6th. I'm not sure when SantaCon is. Yeah, I don't even know what SantaCon is. All right. Dude, I've been up since like 3 a.m. this morning, man. Like I couldn't sleep, but really before that, like I was up at 2:30 Central Time. So 3:30 market time. I just haven't been to sleep, man. I woke up, I couldn't go back to sleep. Yeah, we appreciate it. Again, y'all hit that like button, team. Markets rip it up. I mean, listen, you know, the problem, like, what boggles my mind here, like what truly boggles my mind is how many people predict crazy market crashes and dips, bro. Like, how many people have we seen predict crashes here that they come out and they say, you know, tomorrow's the day in which we crash? Like, how many people have we heard predict that? You know, and the crazy part is like they're consistently wrong. At a certain point, you got to think maybe they're just the same person with different usernames, just kind of getting weird and like being obsessive. Because at a certain point, I think you got to look at it objectively and say, okay, well, crashes are hard to predict. They're super rare, you know. And the market's already down over the last few years. Like if the SPY was breaking highs and like pushing up to bubble territory, you know what I mean? Like I might think differently about it. But like the last time we got anywhere close to highs was all the way back in 2022. And so like we're kind of on like a rebound phase here. If we were like ripping over highs and doing that, maybe I would be a little bit more likely to think we were going to crash, but like we're just not anywhere close to that. And so you got to look at the market in phases. Will there be a Christmas rally? I think we're already kind of experiencing somewhat of one, you know. Like I think we're already kind of in that crash period or in that Santa rally period. Maybe not. Maybe it's early for a Santa rally, but I think we're already kind of getting there. You know, we're up a lot already. You know what I mean? So like, I think it's possible that we're already there, but maybe not. I don't know. Let me see what the poll says. Poll has 63%, staying higher than expected. That we're 38% say lower. I haven't really been active on Twitter lately, man. GameStop is trending. Ronaldo sued for promoting Binance. All right, so here's some facts about Charlie Munger. Rest in peace. At 29, he divorced his wife and lost everything. At 31, his son died of leukemia. With no health insurance, he lost everything again. He got one eye removed that left him half blind for life. Despite this, he became one of the richest people in the world, building an empire with Warren Buffett. All right, so apparently 60% of Americans are living paycheck to paycheck heading into the holidays, according to CNBC. Is that true? We got NBA mortgage rates dropping in 10 minutes. We'll see what they show up as. Dollar index falls. Market rips up. Stream notifications didn't go out. That's weird. I started about 10 minutes late. Maybe that's what it was. Foot Locker is up a lot this morning. Do they have earnings today? I can't remember, man. Yeah, Foot Locker did drop earnings today. They came in at 30-cent EPS versus 23-cent expected. Revenue expected at 1.96. I'm not sure what they came in at. Dollar Tree also posted a miss. They expected 101. They showed 97 cents. Billy lost more than expected. Hormel Foods lost more than expected. So, but Foot Locker's up a lot, which is surprising. I don't like Foot Locker as a company at all. You know, like I just don't like them as a company at all. I think they're risky. I think, yeah. I'm not sure if this was intentional, but Roaring Kitty kind of looks like a vampire. Like he kind of looks like a dude you'd see in Interview with a Vampire with Brad Pitt and Tom Cruise. You know, looks like a character in that movie. I like Roaring Kitty though. Good dude. Seems like he had the right intentions. One of my favorite Charlie Munger quotes. We're going to be hitting you with some Charlie Munger quotes today. One of my favorite ones that I use here a lot is the big money is not in the buying and selling, but in the waiting. Charlie Munger. Again, great quote by him. Great quote, personally. And I mean, you can speculate on whether he was a good or bad dude, but that quote right there, one of my favorite quotes. I've used it at least probably 50 plus times on stream. Just a good freaking quote, man. Absolutely true. My biggest mistake is over trading, so like I need to follow that quote a little bit more. Another one of my favorite quotes by him is this: "It is remarkable how much long-term advantage people like us have gotten by trying to be consistently not stupid instead of trying to be very intelligent." Right? And if you don't know what he means by that, think about it objectively. Like, beautiful quote, because I just try not to make stupid decisions. I don't need, like, the problem, what he means by that is, like, think about it like this, okay? Is that people try to look really smart, right? In day trading. Here's a great example. People try to look really smart in day trading. How do they look smart? They try to take big money and make a lot of money and show everybody how smart they are, right? But that's a mistake a lot of the time. You really should be trading much smaller than that, you know? And so they're so desperate to look intelligent and to seem like they're more successful at trading than they are, that they end up just losing more money than they would have by just being smart, you know? And so try not to be stupid instead of try to be smart and try to look super smart, you know? Another way of saying is don't try to look smart, be smart. Probably a better way to say it. I mean, of course, there's top 3 dumbest people in the world right now telling you this on this YouTube channel. So, I mean, you're good. But, yeah. Hey, what's up, Beach Bum? Yeah, I don't know enough about Billy. Black Friday didn't early happen this year. I'm not sure what you mean by that. I'm not a big Black Friday person. I never have been a person in which freaking loves Black Friday or anything like that. I just never have been. I'm just not really somebody that celebrates it like that. I don't get wrapped up in consumerism that much. I try to just be smart and like understand that most of the time the companies are bumping up prices and then dropping them. So like you're paying what you would pay. They're just talking you into buying a bunch of stuff. Standard Chartered Bank predicts Bitcoin will reach 100K by the end of 2024. See, who's making these freaking predictions, though? The only way Bitcoin's going to hit 100K is if the ETF gets approved, right? But even if that gets approved, it's unlikely that it's going to hit 100K, in my opinion. I think if the ETF gets approved, it'll pop over 50. You know, that's what I think will happen. If Bitcoin ETF gets approved, it's going to pop over 50, I think. Maybe not. It might not even get that high. It's certainly not going to hit 100 by the end of 2024, though. You know, at a certain point, you got to think about these banks are just trying to gain notoriety by saying this, right? They know they're wrong. They know it's probably not going to happen, but they're just kind of saying it because they know it's going to bring some eyes to their bank and they're going to get some supporters from it, right? It's a game, I guess. I can't really knock that, but wait, so there's a copy of Super Mario 64 for the that's sold for 1.56 million in July of 2021. Why? Why would you buy Super Mario 64? Is it more rare than I remember? I used to love this game, but like, why did it sell for so much? Pump them up, of course. They market stuff up 100% and then put it on sale for 50%. Yeah, 100. That's exactly right. Bro, I woke up, man, and I don't know if I'm just getting old. Maybe it's like arthritis. I woke up and this hand freaking, like my hands, my hands hurt. You know, I don't have really small hands. My hands are a little bit bigger if you can't see. Like I have a little bit larger hands, but like they hurt, man. They freaking hurt, dude. You know? Like to bend them hurts. Like it hurts, man. I looked it up as soon as I woke up. It could be 2 things. It could be circulation problems, which is bad because I already got circulation problems in my leg, or it could be arthritis, which is neither one of them sound promising to me. Yeah, I don't know why, you know. Got the top 3 hands in the world right now for sure. All right. We had some earnings drop today. Again, specifically Foot Locker. Honestly, I'm shocked. Foot Locker is having good sales, right? I'm shocked. The reason I'm shocked is because, like, there's been so much competition that sprouted up for Foot Locker and shoes over the last 5 years, I would say, right? Like, imagine how many, like, 20-year-olds or sneakerheads now slanging shoes for $600 a pop, right? Like, even at the mall, right? You go to the mall, there's other stores that aren't Foot Locker. A lot of people buy stuff online. They can get it, you know what I mean? I guess the big benefit of Foot Locker is that it's going to be obviously real shoes compared to like some of the other stores that might be selling fakes. Yeah, rest in peace to Charlie Munger. Yeah, I don't know, man. I mean, the more likely cause of this, guys, is yesterday we had no gi. Yesterday we had no gi jiu-jitsu. And, like, we've also been working a lot on Spider Guard, which, if you don't know what that is, Spider Guard is where it's very difficult to explain. Spider Guard is when you, it is when you sit on your butt and you grab both sleeves like this, and then you put your feet and use that to like manipulate the person in jiu-jitsu. Point is, it's very grip heavy. Like you got to have like your sometimes your hands will feel like jello after you do it. That's a plausible cause of this as well. That might be why my hands hurt, is because grips in jiu-jitsu. That makes more sense. Hopefully that's what it is. But it's just weird because they didn't really hurt before I fell asleep yesterday. And now all of a sudden I wake up and they're in pain. Hopefully it's not too bad. But NVIDIA pulling back a little bit. This should drag the market down some. So this should drag the market down some. SPY at 456.60s. You know, Apple popping up over 190s now at 190.40s. 190.40s. Yeah, if you don't know what Spider Guard is, there's going to be a lot of jargon that you're not going to understand. But this is probably why my hands hurt now that I think about it, right? Right here, that's probably a bad picture. Right? So this is probably why. That's Spider Guard. You see the grips here? This is probably why my hands feel like jello today. But yeah, dude, this hand freaking hurts. My left hand feels fine. So I'm hoping it's not circulation, because speculating on this, if it was circulation, it would be both hands, hopefully, right? I don't freaking know, man. One of Foot Locker's execs said on Bloomberg yesterday they have made a transition to other brands versus Nike emphasis, Uggs, Timberlands, etc. Yeah, but we didn't really use Spider Guard yesterday, though. Yesterday was no gi. And so we mostly did, what did we train? We trained, man, what did we train yesterday? We trained hand fighting in like a neutral sitting position and underhooks, fighting for underhooks and hand fighting mostly. And then we rolled a couple times. But the point is, like, no gi is much less grip heavy. So it's very strange for my hands to all of a sudden start hurting. Anyways, hypochondriac John over here. GameStop trending. AMC moving up. So GameStop's trending. AMC is moving up a little bit. AMC over $7. GameStop, you know, again, somebody said earlier that everybody was going to dress up like Roaring Kitty to Santa Rally, which I don't even know what any of that is. I know what Roaring Kitty is. Recently watched the movie Dumb Money, but I knew what it was anyway. I was actually one of those streamers during the GameStop craziness. If you've been watching the channel long enough, you remember That's really when my channel went. That's when my channel started to get real views, is what I'll say. Like, that's when my channel started to really gain some traction. Also, y'all hit that like button if you haven't already, team. We appreciate it. GameStop is getting ready to go to 1,000 and Bitcoin to 1,000,000. All right. All right. Buy it all with booming today. Maybe. I mean, Nvidia's pulling back kind of heavy. Again, though, the good news is like Apple's ripping up a little bit. You know, Apple's up there. Apple's testing the previous closing price. Trying to go green on the day, bouncing back at 190. My portfolio is really nicely green here today, honestly. And so we're up. At this point, my portfolio is up a couple thousand now, which is great. You know, another green day today. So that's nice. We'll see if it continues. GameStop now pulling back, though. GameStop gapping up pretty heavily, though, in pre-market right now. Look at GameStop here on the right side. GameStop is at 1470s right now, 1470. Still moving. All right, remember, GDP data comes out at 8:30 Eastern Standard Time, 8:30. Y'all slap that like button if you haven't already. We're going to do a poll like we always do. Will it come in higher or lower than the 5% expectation? All right, guys. Again, Tesla delivery day is something that we're going to stream as well. Let me share this. There we go. Higher or lower GDP data? I think it's 5% expectation, right? Let me check. We got that one up. Let me put a different one up here. So today is Wednesday. So again, we had mortgage data come out. So MBA mortgage rate came in at 7.37%. Still very high, but a little bit less than last time. Last time mortgage data, 30-year mortgage rate came in at 7.41. This time it came in at 7.37. All right, so yeah, GDP expected at 4.9 to 5%. All right, so we got our poll live as well. Bro, I've got like crypto bots spamming. Like how, like, dude, there's got to be some way for me to ban. There's got to be some way for me to ban like certain commenters. Shout out to who did this. Shout out to Neil for immediately liking the post. Thanks so much. Falling bond yields help make another Fed rate hike likely next month. It's not going to happen, man. It's not going to happen, bro. Like, again, we're not going to raise rates next month. That's just not going to happen. Again, it's almost certain that that's not going to happen. Like, if we look at the Fed watch tool, right, which will give you accurate, like, probabilities around this. 99.8% of people think we're going to stay the same. 0.2% of people think we're going to raise the rates. A rate hike is so infinitesimally small percentage that it shouldn't ever be predicted. No offense. I mean, again, maybe I'm wrong. If it does happen, the market's probably going to tank. But it's so unlikely, guys. Like, you have to understand probabilities. Like, it's so unlikely that the Fed is going to raise rates in a couple weeks. I'm not sure why people bet on it every time. I'm not saying you're betting on it. You're just saying it could happen. I get it. But, like, again, it's one of those things where it's kind of like you're trying to snap people out of it, because every major rate hike decision, we get people come into the stream and bet against expectations, right? Even though, like, again, the chances of this are 0.2%. right? 0.2%. So like not even half a percentage, not even a quarter of a percentage. But even still, with such a small bet, for whatever reason, you get some people that just want to be contrarian that come in and bet against it, and it's just kind of like snap out of it. It's not going to happen. We're going to pause. We're probably, my guess, this is probably going to be the monetary policy for the next 6 months, is that we're going to continue to pause until about May, and then we're going to cut rates. Potentially starting around May, sometime right before the summer, we're going to start cutting rates slightly to ease into rate cuts and pivoting. That's probably what's going to happen. We're probably going to sustain a pause. We're not going to raise rates moving forward until mid next year, early next year, mid next year. And then again, we're probably going to cut. I don't think we're going to raise rates at all. You have to understand, like, rate hikes are a lagging thing. So like we raise rates, there's a lagging effect to it. So we raise rates. It takes a year for the banks to experience the pain of those rate hikes, right? And in that regard, we've raised rates really aggressively over the last few years. And so what's going to happen if we don't stop raising rates is that the banks are going to get really hurt by this, and it could push us deeper into a recession. I think the Fed wants to avoid that, and they want to do a soft landing, of course. And so I just think another rate hike is just very unlikely. I think it's almost certainly going to be a pause. I know a couple quarters ago, Powell said that he thought we were going to raise rates twice this year, and then we raised rates once, and then we didn't raise rates again. But since then, his tone has completely changed on that, and much less likely that we're going to raise rates. I think they hike again. Again, you could bet it. It's just incredibly unlikely. AMC, GameStop going blockbuster. Yeah, I mean, GameStop definitely. AMC is still used. Like, people still go to movies, right? They might go to movies less, but they still go to movies. GameStop's the more vulnerable company, in my opinion, because the amount of people that buy physical copies of video games are going down drastically. It's just not enough, like, to sustain that type of business. And when you can, like, the only thing that might help GameStop is commercial real estate struggling and prices going down. If they do and continue to go down, that might help the margins get a little bit better with GameStop, just specifically rent wise. But still, you know, people don't buy physical copies like that anymore. They still buy them, but it's just much less likely. Like, over the last decade, 75% or more of that business in terms of physical video games has gone away. And so all there's really left now is digital downloads, and GameStop still sells consoles, and consoles still need to be sold somewhere, but it's just it's not going to prop up GameStop's business model long term, you know. So I think GameStop's the much more vulnerable company versus AMC. I think AMC is a vulnerable company as well, but GameStop's more risky. Yeah, I mean, we're almost certainly not going to raise rates. It's just not going to happen. Again, anybody that says we're going to raise rates typically probably doesn't understand the market. Maybe they do, but it's just super unlikely. Again, the Fed likes balance. Powell specifically likes balance, right? So what Powell likes to do is balance things to a point in which he doesn't want a market crash. He doesn't want a depression under his watch, right? He wants a soft landing because that means he's managing the economy well, is what a soft landing means. And so in that regard, he's not going to just push the banks, raise rates, even though to a certain extent, the argument might be that that's what's needed. But again, you got to understand rate hikes take a year to affect the market, or to affect prices, or like that, to affect banks and prices. And so we've raised rates really aggressively over the last few years. Those rate hikes, some of them have still not, like, we've still not felt those rate hikes. And again, they're going to affect banks the worst because raising the federal funds rate hurts banks' margins, right? And in turn, they raise interest rates to consumers, and then consumers stop spending and businesses lower prices to combat that, and thus it combats inflation. But like, banks are going to be the ones that are hurt the most, and then that could trickle into everything else if we're too aggressive. One of the reasons we saw a bunch of regional banks fail at the beginning of this year, you know, in the regional bank crisis we had in like March of this year, is because of the super aggressive rate hikes that we've made prior to that. And so there is a balancing act, even though a lot of people think we should just kind of rip the Band-Aid off, like tank the market and then play cleanup. I don't think Powell wants to do that. I don't think that's the good move either. I think they're going to try to protect the banks a little bit more. Yeah, all good, Fister. Again, I'm not saying that's what you believe. I'm just saying, again, yeah, again, something bad would have to happen, like V says. Something bad would have to happen to cause them to do that. And I'm not saying that doesn't happen. Again, you guys know me. I don't like definitive statements. What I do go by is probabilities, and I think it's very low probability that we raise rates next month and on the 13th or 14th. I think it's just super low likelihood that that's going to happen. Not to be braggy, but like I've predicted the last 6 rate hikes correctly. Like all the last 6, I've predicted them correctly, even though we've had a lot of people in chat that have done the same thing, saying, "Oh, well, we're going to raise rates." And to be fair, it's not really hard to predict these things correctly because it's so likely that we're going to go with what's expected. So if everybody's expecting a pause, we're probably going to pause. If everybody's expecting a rate hike, we're probably going to raise rates. Right now, everybody's expecting a pause. Gold prices have shot up over the last couple weeks too, man. Gold over 2,000 at $2,060. Hit 20,000, or I'm sorry, hit $2,072 a couple days ago. Or no, I'm sorry, hit that late last night. Broke highs, hit $2,072. The lifetime high is $2,089. Apple's still heading up though. Look at Apple. So Apple's still moving up. SPY's still looking good. Again, hopefully GDP data will be a lot of people have called for a recession, a hard landing. They think we're going to hit a hard landing. They think we're going to go into a recession and all that stuff. Today's the day we're going to find out whether we're actually close to that. The technical definition of a recession is 2 consecutive losing GDP quarters. And again, we haven't really seen that lately. And so today's a day in which we might get some insight into what might happen there too. Yeah, I mean, we technically did a year or 2 ago straight. But that's not what everybody's referring to when they say a recession. We did have 2 consecutive losing GDP quarters. Like that did happen. But a lot of people are predicting we hit another one, and that we have that again. And again, that's very low probability right now. Maybe we do. I guess I'm trying to teach people that the internet's wrong a lot. And I'm wrong a lot too. You know what I mean? But especially with crash predictions, you got to learn to just tune it out. Maybe they're right, but you're going to lose more money not riding the market up long term than you are going to be if you hold the market long term and the market crashes and then you continue to sit on it. Like you're going to lose more money missing out on the gains that you would make just sitting in the market than you would trying to get scared and time a crash. It's just not what smart traders do. The real question is crypto. What does Bitcoin do? All right, so Scotiabank missed earnings. EPS was 126. They expected 165, so a big miss for Scotiabank, which is Canada's 3rd largest bank. Provisions for credit losses for basically loans going bad were 44% higher than expected at 1.26 billion versus 870 mil expected over the. So, yeah, and this is by Genevieve on Twitter. CEO says consumer health is weakening, but confident earnings increase in 2024. Again, we had some other earnings today. Foot Locker's the big one though that missed. We'll post this here. All right, so again, we had Foot Locker beat expectations. Others included Dollar Tree. We had Billy, Wolf, Nats, Hormel. Does OKTA have earnings release this morning? I'm not sure. This evening, we've got Snowflake and Salesforce, which are pretty big numbers. I'm not sure what they're going to do, but Snowflake and Salesforce earnings this evening. So that has the potential to weigh on markets heavily. Robinhood is trending. Coinbase is trending as well. Apple's still green on the day, though. Gold's still up. What else is moving? Again, the NASDAQ's pumping. Apple's moving up. NVIDIA, another big stock, up to almost 482s right now, sitting right around 482s. I don't know if today's a trend up day or not. I hope it is, but I'm not sure. I'm hoping we see 45K after the spot ETF approved. Yeah, I mean, we'll see. Shorted Thar at 5 something a couple days ago. I got hit with a public offering at 1. GDP will likely set the trend for today. Yeah, for sure. Yeah, Coinbase is up a lot. Looks good. Let's see if it holds. Almost up to 130s for Coinbase, which is pretty impressive rebound. Coinbase was at less than 30 a year ago. So, I mean, yeah. Coinbase was at less than 30 a year ago. So Coinbase had a big run, mostly with crypto. The Mayflower Society estimates that from the 102 passengers who traveled on the Mayflower, roughly 35 million people are descendants of the original passengers, 10 million of whom live in the U.S. It's looking a lot like Alabama here right now. And that's all I'm saying with this data, you know. Yeah, markets are just surging up, man. Definitely getting a Santa rally. All right, so Mark Cuban is selling his majority stake of the Mavs to Miriam Adelson and casino tycoon Adelson family for a valuation in the range of $3.5 billion in one of the most unique setups in NBA history. Cuban keeps shares in team and full control of basketball operations. How much did he buy the Mavs for? Dang, bro. Cuban with the power move, dude. So Mark Cuban bought the Mavericks for $285 million from Ross Perot Jr. in 2000. 285 mil. So he turned 285 mil into 3.5 billion. So he more than 10x'd his money. Yeah, that's impressive. He more than 10x'd his money. I like Cuban. Shout out to him, man. That's a good move. Yeah, that's impressive. If we get a daily close above 250, that would break a major trend line between three major peaks. I see someone suggesting Bitcoin would sell off after spot ETF. No, of course it's not. Because market price is only what somebody's willing to pay for it. Like, it's not going to sell off because it's going to cause, like, you can, the reason you know this is because you've probably seen posts on social media saying, hey, it's a rumor, the spot ETF is going to be approved in less than 24 hours, they'll say, right? And what happens when those rumors come out? Bitcoin shoots up. And then the rumors are proven false, and then Bitcoin falls back down. And so extrapolate that over a larger period of time once the ETF is actually approved, if it's actually approved. And, I think it's going to move up a lot. Is there any kind of timeline on the Bitcoin ETF? I think they say it's supposed to happen before January 10th, but who knows? Y'all vote on my Twitter poll as well, guys. Here's my Twitter poll. If you haven't already, check out the Twitter poll here. I appreciate it. Vote on the poll. Help me out. I appreciate the love. Thanks so much, guys. Yeah, rest in peace to Charlie Munger. Stoicism. Bro, I see a lot of people pushing stoicism. Like, listen, I'm not saying being stoic isn't the right move, right? But I also think it's something that you're born with or not. You know what I mean? Like, the people I see the most preaching stoicism are the least stoic people I know. They get worked up over freaking everything. You know what I mean? And so it's like, listen, I get it. You want to be stoic, but it really is like, just be who you are. You know what I mean? Just be who you are. Like, don't push. Like, you don't need to be whatever the internet tells you to be. Forbes announced the launch of its under 30 list. All right, so Forbes 30 under 30. Honestly, it looks like India's killing it here. A lot of these names are Indian names. So shout out to India, man. They've got some really smart people for sure. So shout out to them. But all right, so SEC delays the decision on Frank Templeton's spot Bitcoin ETF. Here's the problem, though, right? Like, this is not outside the realm of possibility. The SPY just broke highs. So the SPY just broke highs of the day. It's at 456.91 right now. Look at the SPY break highs. Volume's still a little light, probably in anticipation of the GDP data. But here's a potential like risk factor of the SEC. The SEC obviously doesn't like crypto. It obviously doesn't like crypto. It's not super hard to predict that if the spot ETF does not get approved, that Bitcoin and other cryptocurrencies might suffer from it, right? So with that in mind, it's not outside the realm of possibility that the SEC delays making a decision, getting people hopeful about it before crushing everybody's dreams in an attempt to push crypto down. Again, it's not outside the realm of possibility. I'm not saying that's what's happening. I'm not trying to throw out conspiracies or whatever. I'm just saying it's possible. It's possible. So just be careful. Again, I've said it before. If the ETF gets approved, that's going to be great for Bitcoin. If it doesn't get approved, that's going to be really, really, really bad. If none of them get approved, that means. You know what I've been thinking of? I've been thinking of getting a Bitcoin miner heater. Like, I use this heater every day. I get a Bitcoin miner one and at least earn some Bitcoin from heating up the house. Hey, shout out to all the follows we got on Twitter. Thanks so much. I appreciate it, guys. Is Tesla going to keep going up? Yeah, Tesla, guys, has been one of the best performing stocks here. Look at Tesla, up to almost 250s right now. Big power move. Again, this is leading into Tesla Delivery Day, which we are going to stream tomorrow. Tesla Delivery Day is tomorrow. Let me see what time it is. Tesla Delivery Day is tomorrow. It's at 2 p.m. Central Time tomorrow. We also have CRM and Snow earnings this evening. Tomorrow we've got Kroger Academy, TD Bank. We also have Marvel, Ulta, Dell. Earnings season is basically done. The last big one we're going to have is next week on the 6th, I believe. On Wednesday, which is specifically GameStop and C3 AI. Those are going to be big ones. We also have ChargePoint, Chewy, a bunch of other ones that happen that day. So it'll be a big day. Coinbase over 130 right now. Apple almost up to 191. Looks great. My average price on Apple, guys, is 166. 166 is my average price on Apple. It's currently at 190. My average price on Microsoft is 312. It's at almost 386 right now. Beautiful trades there. Beautiful trades. My average price on Tesla right now is 205. It's at 249 right now. I mean, this market makes me look better than I am. Both smarts wise and looks. Amex ripping up too. My average price on Amex is 144. It's at 166. Still gapping up again today. Average price on Google. Google are a little bit back down to earth a little bit, but I'm just kind of showing you what I'm holding. My average price on Google is 125. We're at 140 basically right now. My average price on PayPal, I'm in PayPal as well. My average price there is 51.40s. We're at basically 60 right now. I'm holding MGM as well. 39 average price. Holding Netflix, average price of 380s. We're at 480s. We're up almost $100 a share on Netflix. And we're on a very small piece. We're in Nike as well. Average price is 90. We are at 110. Oracle average price is 109. We're at 116. Pfizer average price is 32. We're down on Pfizer. It's currently at 29. PayPal, like I said, RTX average price is 72. We are at 80. I'm in the SPY as well. Average price on the SPY 424.88. We're at 456.86 right now, so that looks good. Again, I said Tesla already. We're down a little bit in Tyson, down a little bit in Walgreens, but again, up very nice in my portfolio today. We're up nicely today as well, leading into GDP's data report. Yeah, we're going to stream it. Most of these are swing trades / long-term investments. So, is Tesla going to keep going up? Tomorrow's event, I think, is going to influence whether it does or not. I'm not sure. Tomorrow's event's going to be pretty big. You know what I mean? So, like, that's going to impact what happens to Tesla. So, yeah. All right. Love you. So, yeah, CZ resigned as chairman of Binance. Again, market's still surging up. Tesla at 250. My daughter's at detention right now. She got detention. So that's why she's in here angry. She's going to detention. Bro, she shouldn't have been late to sixth period. Biology, Wolf earnings, after earnings, minus 13% chance of recovery. I don't know about Wolf. Sell me Wolf stock like you're Jordan Belfort. I don't know anything about it. Petco? Oh. Ooh, Petco. I don't like Petco. Again, I don't like Petco's outlook long term for a very similar reason that I don't like GameStop long term, is because people buy pet products online now. I know we do personally. Like, we buy pet products online now. Now, I think Petco, they have some market share online, but is it as big as like Chewy or anything like that? I'm not sure. But at brick and mortar stores, I'm very hesitant to invest in. I'm holding some, which is like Walmart and Target. And the reason I'm down to hold Walmart and Target is because those are big enough names in which you need to go to Walmart, you need to go to Target. Like, those are still huge names in those spheres. You know what I mean? Like, I trust those a little bit more than something like Petco. The only question mark regarding pet companies is them selling actual pets, right? Like, actual pets, you obviously can't buy those online. So they're always going to have that protected part of their business against online mail order goods and stuff. But it is something in which I think they're going to lose market share over time. And I think that's a risk. Walgreens down to the lowest price in more than 25 years. And Walgreens is one of those stocks that I'm actually losing on. The retail pet stores are more about social aspects for dogs, maybe. But like, even with that, I think I know there, like I said, there's still an argument for Petco and stuff like that. The problem is not whether they're going to have some need. The problem is whether they're going to lose market share and what that means to their stock. It's not about the Cybertruck. Full self-driving volume 12 is released. Beta is this week released. And first delivery for Model 3. Rate cuts on the table. Yeah, I mean, I feel you. I get it. There's a lot of stuff happening. We're gonna stream it tomorrow. All right, so Ray Dalio says, quote, great managers are not philosophers, entertainers, doers, or artists. They are engineers. I agree with that. Definitely top 3 worst managers in the world right now. Market's still surging up, though. We'll see if it holds. Again, SPY at 457s roughly. Tesla very flat ahead of the GDP report. We still got 50 minutes or so until GDP comes out, guys. And so, again, let me know what you guys think. Will GDP come in higher or lower? List it in chat right now. Let me know what you guys think. Let me look at our poll. 60% of people think it's going to come in higher. 40% think it's going to come in lower. The question, though, is like whether this is good or bad for markets. Yeah, I'm still in Snapchat. My average price on Snapchat is $9.27. Currently at almost $13 a share. So, yep, we're in Snap. You know, again, my trading strategy is very simple and it works. Like, I can't guarantee it's going to work for you. Of course, nobody can. But my trading strategy is very simple. I look for stocks like, okay. And I'm going to try to explain as best I can in stocks for like investing or in swing trading. I look for ranges. So like there's certain stocks like Snapchat. All right. I have swing traded Snapchat multiple times. And this last one is more of like an investment, like a short-term investment. But every time Snapchat dips down to $8 a share, I buy it up, right? When it starts to get up to 12, 13s, I start to sell a little bit. I do this over and over again. I do it a lot with Disney as well. Every time Disney dips down to 90, 85, $80 a share, I buy it up. Once it hits mid 90s or sometimes lower, sometimes higher, I sell a little bit. Sometimes I let it go higher than that. And I use those type of ranges for a lot of different blue chip stocks that I know and understand. To quote Charlie Munger, again, we talked about Charlie Munger earlier. Charlie Munger has one of my favorite quotes. And again, it's something like money is not made in trading. Money is made in waiting or something like that. Big money in the market is made in waiting, not trading, I think is the quote or something. Like to make big money, you need to wait, not trade. It's something like that. But that's my point, is like waiting for favorable pullbacks in healthy companies. Even if they dip, I'm still usually okay because the probabilities of a large diversified portfolio working with this type of strategy is very high, in my opinion. Again, I can't guarantee it's going to work for you. I can't guarantee you're going to make money. Nobody can. But like, I think when you look at it objectively, you have to understand that blue chip companies are the best investments you can make. And so when we have big, profound pullbacks in them to specific support levels and different ranges, I love buying those up and just kind of sitting on them. You know, that works really, really well. I've done this a lot with Disney. I do it with Snapchat. I do it with Netflix. I do it with a lot of different companies, to be honest, back and forth over and over again. I do it with Tesla to a certain extent. If Tesla dips down to 200, you know, all the bears are like, oh, it's doom and gloom. Tesla's done for, you know, and then Tesla ends up ripping up in everybody's face. And then it's just kind of crickets. It happens for a lot of different companies. And so if you can identify the favorable ranges with these and just kind of plan to sit on it for a few months, maybe longer. And if it doesn't work out in your favor short term, a lot of these companies are going to be safe to hold long term as well, right? Like Apple is a great example. My average price on Apple is 166. 166. So if we look at Apple here and we put up like a long-term chart, Apple dipping down here, I got in this thing literally at the lows. I didn't buy it back here. I actually bought it back here. So I'd love to say I called this little pullback. I'm pretty sure I bought Apple way back here. Let me see when I bought Apple. I bought Apple. Oh, I bought Apple October 27th at 6:48 in the morning. October 27th at 6:48 in the morning is when I bought Apple. Oh, I guess I did buy it at the lows. I'll take it though. So I bought Apple here. Shout out to me, man. I cut the bottom. I got Apple right there. Wow. And again, this is my actual average. If you want to see, that I'm not lying here. My trade price is 166.78. So I literally called Apple right there. So I guess I did. I thought I was holding it longer, but again, I traded back and forth. But again, when I bought it, you can learn something from this too. When I bought it, Apple was on, look at this huge pullback. So Apple, when I bought it, was on a couple months of dipping, like a couple months of dipping. And so when that happens, I think it makes perfect sense to say, hey, Apple's obviously a healthy company. It's obviously going to be fine long term. You know, young people love Apple. They don't like Samsung. The rest of the world likes Samsung to a certain extent, but in the US, Apple has the market on lockdown. Like some people use Samsung, of course. Again, I have a 14-year-old. I could buy her the newest and coolest Samsung in the world, and she would take it, but she wouldn't really be happy about it. That's not what she wants. She wants an Apple, because Apple has been incredibly smart about designing their products in which if you use another phone, other people know in group chat, like they know you're on a Samsung, and like kids want to fit in. And so it's a very smart move. And so kids want Apple. They want an Apple Watch. They want Apple phones. And so in that regard, Apple's going to be fine. And so when we have these big long pullbacks like this, it just makes sense to buy those dips. That's usually when I start buying it. I think the mistake a lot of people make is that they start buying stuff when it's like breaking highs and moving up. And again, I do that sometimes too, but it's just not really what I try to do. I look for weakness and buy weakness and then look for bounce backs. When everybody else is telling me how it's going to crash down, I usually start buying stuff. Yeah, but again, it's not about any of that. I actually have a Samsung. So like I have the Z Fold, like I have a Samsung. Like I program and stuff. Like Samsung's, in terms of utility, Samsungs are more powerful phones. They're easier, they're more free is the better way to play. Maybe not powerful, it's not the right word. They're more free phones. Like I can move through Samsungs a lot better than I can move through an Apple phone. They're less locked. I can download more stuff easily on it versus Apple, who has a lot more restrictions. There's just less red tape on Samsung. But there's pros and cons. But regardless of how I feel about Apple individually as like a phone, Apple as a company is very, very, very strong. And so you can't let a cult following impact whether you think the stock is good. Same thing with Microsoft. Like, to be fair, I'm in Microsoft as well. My average price on Microsoft is $312.50. I bought Microsoft. When did I buy this? I bought Microsoft September 28th. So I bought Microsoft. Not bad. I must have bought a couple things here because I bought this September 28th. So I bought Microsoft here. Honestly, these are some pretty good entries, man. If I don't toot my horn a little bit, these are some pretty solid entries. Again, the reason I'm buying them is very simple. Like I start to get dollar signs start to pop up when I see a really healthy company pull back for 3 months straight in a row. Actually, it wasn't as good of an entry as I'm thinking. Oh, wait, let me see. I mean, it was pretty good. Microsoft was a little bit stronger than Apple in this period because of AI and the hype and NVIDIA shooting up, though, is all that was. Do you think a firm will keep climbing? Don't they have earnings coming up, or do they already drop earnings? Do I see any growth for Walgreens long term? I'm not sure. Again, I'm in Walgreens. My average price is 22s. It's at 20, so we're not down that much. We're down like, 1%. So I mean, we're not down much, but or no, not 1%. We're down like 10% or whatever that is. But we're down $2 a share on a $20 stock. So yeah, we're down 10%. But again, I don't know. I bought Walgreens because I think it's cheap, and I think people still need Walgreens. I still use Walgreens. People still use Walgreens, but maybe I'm wrong there. None of the positions I take are large enough in which my portfolio is in real trouble if I'm wrong about these. All right, we still got 40 minutes here, guys. 40 minutes. Again, GDP coming out. Hit that like button, guys. We got 75 likes here. I'm not going to shut up until we have over 100. So y'all hit that like button. We appreciate it. Real question for my crypto guys. Okay. And again, this is just a trading strategy that I think makes sense. So a lot of altcoins are kind of sketchy in crypto, right? Is there good money to be made shorting some of these other cryptos? Like obviously not Bitcoin, obviously not ETH as well. Even if those fall down or whatever, I think it's too risky to short those. But like there's a lot of other more obscure cryptocurrencies that very rarely hold their gains, no? And wouldn't that be easy shorts? I guess the question is, how easy is it to identify bad cryptocurrencies and then short them? I know the crypto market has less red tape, so does that make it easier to do, or like how, that seems like a good trading strategy that I want to look into a little bit more. Yeah, I'm not shorting Bitcoin, but I feel like shorting some of these other crap coins makes sense. Walgreens is similar to Rite Aid. CVS took over. Yeah, I mean, I could probably see that. Again, I'm in 50 shares of Walgreens, so I'm down like $100 on it. But we're up nicely on my portfolio overall. Yeah, I mean, you don't need to talk about the platform. The platform is insignificant. I know a bunch of pretty good crypto platforms. Certainly many people make money shorting shitty crap coins. I have no idea how to choose which ones, though. Yeah, that's my only question is like, because again, the reality is I think the SEC is going to be really heavily against, and they have shown themselves to be really heavily against most cryptocurrencies outside of like Bitcoin, and maybe ETH. But even ETH is going to be in trouble too. But I think if that's the case, there might be some short opportunities. I think it's really risky right now, though, with the potential ETF approval, because if it does get approved, it's just big risk, big reward right now. He says, please let your kids believe in Santa. You believe in the Forbes 30 under 30 list. Honestly, funny story about my daughter. And it kind of shows the difference between my son and daughter is that my daughter, we had to tell her that Santa wasn't real. We had to tell her that Santa wasn't real when she was like 11 or 12, and she was distraught afterwards. She was like hurt, she was like sad. Like genuinely sad. And the reason we told her was because, and we explained to her, like, look, if we don't tell you this, you're gonna get made fun of at school. Like people at your school are gonna make fun of you, And like she cried and was like super sad. My son, by the time my son was like 8, 7, he was like, I don't believe in Santa. He was like, y'all are Santa. Like he knew. And so I think my daughter just trusted us more, All right, guys. Hey, we got 35 minutes until GDP data comes out. 35 minutes. Oh, sorry, Brandon. I just ruined the holidays for somebody. No, I mean, listen, Santa's real. I just kind of have to, you know. Yeah. Sorry, bro. Santa's real, you know. I mean, to be fair, you probably should have turned that off as soon as you heard me get into that conversation. Sellers getting absorbed on the NASDAQ. All right, guys, Microsoft's still popping up a little bit. We'll see if we hold. Microsoft dipping down some, though. Here's the Q. Here's Tesla. No good way to backpedal the air. Yeah, I thought about it, bro. I'm like, man, I don't know how to backpedal from this. Yeah, I was like, I don't know how to backpedal from that, bro. I was trying to think of a way to save you there, man, but my bad, dude. Yeah. So this guy didn't make the nice list. He is 5, so he believed it. Tell him I'm top 5 in the world, you know. If you wanna put me on loud again, bro, I'll help you out. You know, just let me know if you do. If you put me over the speaker again, I'll help you. Just let me know. GM is going to the moon. Yeah, I see GM right now. I've heard some news about it too. But GM all the way up to 31.50. Shout out to GM. Walgreens dividend is like 8% though, right? Is it? I don't even know what Walgreens dividend is. It's 48 cents a quarter. I mean, you know. Yeah, so, I mean, percentage-wise, it's still definitely not 8%. Yeah, so the dividend is 2.4%. So. All right. Charlie passed away yesterday. Yeah, for sure. I know. He almost made it. All right, guys, we got 30 minutes. We still got about 500 people here already. Again, y'all slap the like button. We got over 100 likes there. Thank you, guys. We appreciate it. We're over here trying to give you guys free economic data, free market data. We don't charge a penny for anything. You know, we're relentlessly, you know, righteous and giving. You know, we don't sell anything. You know, we're doing this because we're just looking out for you guys. We have no other ulterior motives at all, guys. Like, we're just doing this because we're here to help. Okay. Now, if you want to check out one of our sponsors, check out TopStep. It's a funded account program in futures. They give you a demo. They test your skill. If you can hit the target on the demo without hitting the max loss, they fund you between 50 to 150K with a 90% split. And I know at home you're probably saying, why should I do that versus put the money up yourself? Because most day traders lose. I lost thousands of dollars when I first started trading. Thousands. Almost everybody I know did. And that's just kind of market tuition is what they call it. And so you can either spend thousands of dollars in market tuition, or you can try a funded account program. The base combine on TopStep's $49. If you lose, it's not the end of the world. You're out less than $50. If you're good enough to pass it, you still keep 90% of your split once you're funded anyway. They pay out millions, fund thousands of traders every year. They've been around for over a decade. Just taking the challenge builds your skill, and it's just genuinely useful. They have free funding coaches, just really, really useful. And the reason you want to try to trade futures is because there's no PDT in futures. I can essentially day trade the SPY in what's called the E-mini. I can essentially day trade the Q in futures in what's called the NASDAQ, which is what really the Q is based around. And again, patterns are very similar to large blue chip stocks. There's just no PDT rule, right? It's what most pro day traders actually do. If you want to check it out, here's the link. Great way to help support the channel. They are a sponsor of mine. Yeah, I just bought an espresso machine. TSLY. DJ? I mean, no, I've never heard of this one, man. Explain this to me. Tesla option income? It don't look like they're earning very much from Tesla option income. This thing's down like 100%, or this thing's down like 50% in the last year straight. It's been around for a year. It's down 50% in that year. It's not really a big selling point. Do they pay like a dividend or something for TSLY? I mean, it's down 50%. They better. Hey, thanks, Beach Bum. Have a good day, brother. Yeah, all good, Blaze. You know, don't use them then. It's up to you, brother. It's all good. Again, the joke there was like, we're doing this out of the kindness of my heart. Of course I do this to make money. I mean, anybody in my shoes would. I mean, y'all would too. You know what I mean? So like, of course we're doing this to make money. Everybody on YouTube does. And that's normal. That's pretty standard. Nobody's spending hours of their time for free for nothing, you know? But still, like, if you want to help support your boy here, check out Top Step, you know? Yeah, I got an espresso machine. It was like a DeLonghi or something like that is what it was called. I got on an espresso kick for like a week, and now I'm back to coffee. Yeah, where are bonds at right now? The 10-year yield is dipping down some more. It's at 4.33% as the market rips up. You got to understand, the market, equities market is competitive with bonds, right? Like the 10-year bonds, right? 10-year treasury bonds. It's guaranteed money, but it's at a much lower percentage than, say, like the S&P 500. And so bonds right now paying 4.3%. The reason bonds are going down is because the S&P 500 is ripping up. And so even though the S&P, they're competitive assets, right? Bonds are guaranteed, but lower yield. Equities are not guaranteed, but a higher yield. And right now, equities are ripping up, so bonds are pulling back a little bit. But the 10-year is still at 4.3%, which is not like a terrible... you know, like back in 2020, it was at 3.9%. So, I mean, it's still doing okay. Yeah, I know Nespresso. Yeah, all good. I just called my husband to tell him about the Santa bus that just went down. As I said, you won't believe what just happened. I hear my daughter in the car. What? What happened? Bro, let me just clarify. Santa's the man, you know? Like, I support him, I guess. How do I get rid of my emotions? I take good trades but exit too early. The only way to really do that is to just get your reps in. You do it over and over and over again until you start selling later and being a little bit more patient with it. It just takes, you know... Back in the day, there was this guy, and I always use this example because it makes sense, and it really lets people understand what you got to do. But back in the day, there was this guy. His name was Pavlov. You know, he was a scientist or a psychologist. What he started studying was the effects of conditioning, classical conditioning specifically, but he started studying like the effects of conditioning on dogs. And so he would feed the dogs and ring a bell. He would ring a bell and then feed the dogs. He would ring a bell and then feed the dogs. And what he noticed is that, you know, once he did that for a certain amount of time, the dogs would salivate without the food being present. Without the food stimulus being present, the dogs would still salivate even if the food wasn't there every time he would ring the bell, right? So he noticed that he could condition them to salivate, right? To drool, basically, whenever they heard that bell ring. It's one thing that I see it with my dogs at home. Like if I go ooh, like I always make that noise if I'm giving them something good. If I go ooh for the dogs, my dog Bruce starts to run in circles and get really, really excited. So he's conditioned to get excited every time I go ooh. Anyways, all that out the way, trading is the same way, right? Like the reason most new traders fail is because they haven't conditioned themselves to make the correct decisions. And that takes time. You got to do it over and over and over again. You got to condition yourself in trading to make the correct decisions, meaning hold on to trades long enough, don't sell too early, whatever the case might be, whatever traits of a trader you might want. Those things take time. They take repetition. You have to condition yourself through repetition. You got to do the correct things over and over and over again. And so the only real way to get better at not selling too early is to do it over and over and over again, preferably, in my opinion, with smaller size. Take smaller size. It might be easier to let things work, and then slowly increase your size afterwards is what I would personally do. Not telling you what to do, but that's what I would do personally. Yeah, GDP expected at 5% today, guys. 5%. Oh, man. Angelique, that would have been a bad move. Good morning. Am I late? Maybe you already said it, but do we need higher or lower GDP to make the market go up? Higher GDP is probably going to make the market go up, although it could make the market do the opposite thing because of inflation fears. You know what I mean? So, like, we don't know what the market's going to do. One of the things with these GDP releases is that we really have no idea what the market's going to do. We don't know if the market wants higher or lower GDP data, especially GDP. I'll tell you this. It depends on what the market's fearing. If the market's fearing inflation, we probably want lower GDP, but I don't know if the market's necessarily fearing inflation as bad as it could be. I think the market more so doesn't want to hit a hard landing. They want a soft landing. They want no recession. And so in that regard, I think we want higher GDP numbers, which is more close to convention. But I really don't know what the market's going to want or how the market's going to react. My guess is the market wants higher GDP, and that higher GDP might influence the market in a positive way. But let me know in chat. Do you think the market is going to react positively or negatively to higher or lower GDP? Let me know what you think the market wants, higher or low GDP in chat. My guess is higher GDP numbers will affect the market positively, but really not sure. Yeah, the other thing about holding trades and cutting trades too early, the other move to make, in my opinion, is like what I typically do if I'm up big in anything. And this is a mistake I see a lot of people make, especially in like the AMC GameStop community. No offense to you guys, but any community in which a stock is up huge percentages, right? Like I was watching Dumb Money, the movie Dumb Money about Roaring Kitty, and in my head I'm sitting there screaming, bro, sell some of it, lock in some of that. Because that's what most smart traders do. You're going to get pressured not to sell by whatever community you're a part of. That's normal. You got to learn to just ignore them. They don't have your best interest at heart. They have their own best interest at heart. And so what you have to do, if you're up big in anything, take a piece of it off. Take a quarter of it off, right? Take 25% of the trade off. If you got $12 in profit, or if you have 12 shares, take 3 of it off. Lock in that money. Lock in that profit. That way you're protected. I usually go with taking half of it off. So if I'm up big in anything, I usually take half of it off. If I think it can go higher, I'll take half of it off, and then I'll leave the other half. And that way, even if it reverses back down against me, I'm still break even because I took half of it off at the right spot. It's not going to turn into a losing trade. And I think that habit can be very, very strong and very powerful in trading and account building, as well as like most losing traders are there because of big drawdowns in their account. Like they have these big, massive drawdowns that they can't come back from. And so again, I've talked about it before, but one of the moves that I always use in trading is I build up a cushion first, like in these funded account programs like Top Step. Like Top Step gives you a demo. Base one's 50K. If you can make 3K in profit on that 50K demo without losing over 2K, They fund you 50K with a 90% split. If you get funded and make 10K, you get to keep 9,000. Since they're funding you the money, they keep 1,000. You also get to keep your first 10K, but that's a different story. But the point is, you have to pass that test. You got to make 3K in profit without losing over 2,000, right? And so you might say, how do you do that? The way you do it is you build up a small cushion on the day first and foremost, right? And then you use that, you use how well you do in the beginning to influence what your decision making is for the rest of the day. And so if you build up a cushion of $100, then you might be able to take a little bit larger size since you have that cushion. And so then if you take that $100 cushion and you take larger size and then you make another $300, now you got $400. You can either walk away or you can take even larger size if risk management allows it. Then if you do well there, then you might have a day where you're up $1,000, right? You get 3 of those, you're funded. You know what I mean? And that protects yourself from big drawdowns. So say you build up a cushion of $100 and then lose. Then you're back to break even. You know, you lower your size again and you build up another cushion. You know, say you build up a cushion of $300 and then you lose. Again, if you're doing it correctly, you should be either break even, small loss, small win, and then you scale back your size. Rinse and repeat that. That's how you get funded easily. That's how you get funded in a more risk-averse way, and you can ultimately protect yourself from big drawdowns. That's what you do. That's how you get funded. That's what makes the most sense. But again, they're a sponsor of mine, of course, so I'm biased. But like, check them out here if you want. Yeah, the problem with Dogecoin Millionaire, the guy that made Dogecoin, I believe is the Dogecoin guy. He ended up selling all his Dogecoin for like a really crappy car or something at the time because he never thought Dogecoin would be successful. And so you always sit on a little bit of everything. Like selling all of everything, it depends on what it is. And it depends on how much you're up. You know, there's certain points where you should be just locking in the money and walking away. Greed kills profits a lot of the time, but hey, what's up, Tiny? Reach out to them for the rules, Mr. Longshot. I feel like the DAO will be positive. Maybe. All right, guys. We still got a little bit under 20 minutes left until GDP data comes out. What signals do we use to enter when we trade at Top Step? I use a lot of different stuff. Another one of my sponsors is a company called Chart Prime. We'll talk about them a little bit later, but I use a bunch of different stuff. So Lawrence McDonald said he met Charlie Munger in Omaha after Lehman, and he said, quote, this is a great quote, by the way. He said, Larry, never ever tell anyone about your problems. 90% of them really don't care, and the other 10% are glad you have them. Couldn't be a more realistic quote out there in the world. Couldn't be a more realistic quote. Some problems are good to have. No. All right, guys. SPY still breaking highs. Still breaking highs. Up to 457s right now. 457s. Man. I might start to, again, it might be time for me to start taking some profit off. I'm in Honeywell as well. My average price on Honeywell is 189s. We're at 194s, 195s. Yeah, don't play earnings is probably the biggest one, man. Earnings are what kills people. Hey, John, being honest, don't you think the market is so high? It's scary, like waiting for a correction. Not necessarily. I mean, we might be, Alberto. I tend to think that we're extended on the upside right now. But again, I think when you also have to look at it like this, brother. You have to look at it like this, man. So, like, the natural state of the market is going up, right? It's not going down. right? The natural state of the S&P 500 is that it's going to go up over time, no matter what, right? And again, the S&P gives you 10% on average every year, including crash statistics, which means that on good years, it's going to move up much more than 10%, which is kind of what we see right now. You know, if we look at the last year, it's up a lot, you know, it's up a big amount. And so with that, we don't know. We might be extended. We also might just keep pushing up. A lot of the time we get what's called a Santa rally. And so we're kind of seeing something like that now, in which we're kind of getting like a Santa type rally. But again, I'm really not sure if we're extended or not. What I will say is, like, we might be. But we also could just be in a normal upward market. You got to understand, like, the market hasn't been around the lifetime highs since 2021. You know what I mean? And the natural state of the market is that it's going to go up. And so again, the last time we were around lifetime highs was way back here. And so, you know, we pulled back. We had our bearish year. We bounced up a little bit. We had the last, like, look at this. So the last, from April to basically September, October, we had really big pullbacks. We pulled back for like 3 months in a row. And so finally, we're starting to rebound back from there. You know, the question mark, I think, on any chart right now is this. You know, this level is the real question mark, in my opinion, right here. So, like, you can kind of see this level right here. That's the high of the last while. You know, let me see. The last time we were anywhere close to this was March of last year. You know what I mean? So, that 460 level on the SPY is big. You know, the 460 level on the SPY is very big. And so, again, the question is, does this act as a resistance level or not? And I'm not sure. We'll have to wait and see. Yeah, all good. I really don't know. You guys know me. I don't like definitive statements. I have no idea what the market's going to do. I think long-term, the market's going to go up. And I think that's the bias that everybody should have, is that long-term, the market's going to go up. The problem is, like, movies like The Big Short have talked retail traders into being long-term bearish on markets. And again, that's a losing strategy. It's fine to be short-term bearish, but if you're long-term bearish on markets, you're almost certainly going to lose. The S&P 500's, again, for no other reason besides the S&P 500 keeps up with inflation for this to a certain extent. And so if you sit on cash, your dollars are going to get devalued over time. And in that regard, the S&P 500 is going to move up over time as well. So, hey, thanks for the donation, Ramsey. Short term, anything could happen, though. I mean, short term, it's all open to speculation. All right, guys, we got a little bit over 10 minutes, about 15 minutes left still until GDP data comes out. Market's looking incredibly strong right now, incredibly strong. Short term, I think we are a little extended on the upside, but I think the market's also kind of quietly waiting for GDP data to come out. It's a pretty busy week this week, guys. So we got a lot of stuff happening this week. It's not a slow week right now. So again, just this week alone, again, today we got GDP in about 11, 12 minutes. After today, tomorrow we have PCE data. We've got jobless claims data. We've got Tesla delivery event tomorrow. Friday, we have manufacturing PMI data, ISM manufacturing PMI, as well as Jerome Powell on Friday also. So, and I think he speaks twice on Friday. I'm not sure if the second one's going to be public, but he definitely speaks at least once Friday morning. So again, very busy week economically. And then we also have, economic wise, I should say, we also have, next week we have payroll numbers and unemployment data. So we got non-farm employment change on Wednesday, unemployment and non-farm payrolls on Friday. And then we also have the rate hike decision. We've got GameStop earnings next week. So it's just kind of a busy few weeks here. Will GDP affect gold? Probably, but we don't know for sure. Yeah, trash is out. Yeah, for sure. I mean, it might grow. We don't know. Nobody does either. You know, what I do know is that anybody pressuring you to sell or pressuring you that the market's going to crash imminently usually is wrong. You know, the people that do that are typically wrong. And then they get weird with me when they're wrong. And again, I think it's very hard for some people to admit that I've been right about what the market's done over the last few years. A lot of egos float around in trading, and I certainly have one as well. Definitely top 3 most right trader in the world right now. But yeah. Yeah, I like it when Jerome Powell speaks to be honest. For selfish reasons, though. Powell streams are the biggest streams we ever do here. You know, one of the last Powell streams we had like 8,000 people here live. Powell streams are fun, man. They're chaos for my chat, but they're fun. But they're the biggest streams we do. The FOMC, and I'm not even talking about FOMC meetings. I'm talking about just Powell streams, excluding FOMC meetings. FOMC meetings are big too, but like regular Powell meetings are huge. If GDP comes higher, does the market fall or go up? Nobody knows. I mean, again, we can speculate on what the market's going to do. Market just broke highs as well. So we also have to take into account the extension that we currently have on the chart. So we got about 9 minutes and 9 minutes left. We also have to take into account, again, the extension that we currently have on the chart. You know, S&P 500, NASDAQ, Tesla, all pretty extended heading into this report. Here's the Q. So very extended headed into the report. We're right around 393s right now, 393s. We got about 700 people here. Hey, thanks so much, Alberto. I listen to you every day. Thanks, man. Thanks, bro. Again, not an investment professional. I have no idea what I'm talking about. I just try to report free stuff to people. But yeah, Mo. So nobody knows what the numbers are going to be, right? Like nobody knows what the numbers are going to be. More than that, nobody knows if the market's going to react favorably or not to higher GDP numbers. GDP is expected at 5%. Last time it came in at last time GDP came in at 2.1%. And so it's expected to more than double for this first revision here. But yeah, we'll see. You know, 4.9%, 5% is what's expected. I'm not sure what it's going to show up as. And I don't know if the market wants higher or lower. I know typically if the market fears inflation, higher GDP might be a negative sign because it might mean that there's still a lot of spending going on and a lot of problems there for inflation. Or the market could pivot to more of a recession fearing market in which it wants lower GDP numbers to, you know, mean that we're more safe from a recession. Or no, higher GDP numbers to mean we're more safe from a recession, or it could mean we want lower GDP numbers to mean we're more safe for inflation. It just depends on what it is. Very nuanced report in terms of reaction. And yeah, I'm not sure. Yeah, so it's the Cybertruck delivery event fit. Where to trade on GDP? I mean, you can't trade GDP directly. It's just a data release. You could trade. Now, it's going to move. The reason we watch it is because it moves markets. So, like, it moves markets. It's going to influence the S&P, the NASDAQ, currencies, gold, probably, crypto, maybe to a certain extent. All right, guys. Q pushing up to 393s. Look, man, the SPY is basically breaking highs every couple of minutes here, or it has been. Bonds still falling. Gold still over 2K. Dude, my hand freaking hurts, man. Higher is better, right, for the news? I think so, but we don't know for sure. I think the market wants higher than expected numbers, but I really don't know for sure. We'll probably trade it to a certain extent. We'll probably get ready to trade it too. I think low GDP can prevent
Rate hiking, meaning market goes higher. Yeah, but a rate hike's almost certainly not going to happen, though. You know, like rate hike's probably not going to happen. Again, regardless of what GDP shows up as, it's very, very, very unlikely that we're going to raise rates in a couple weeks in December. It's just unlikely. You know, maybe it happens. People always bet that like somehow that's going to happen. It's just very low probability that we're going to raise rates. It's just not super likely. I mean, again, maybe it happens. I don't think it's going to. SPY up to almost 458. Again, we haven't broken that 460 level since 2022. Or no, I'm sorry. Yeah, we haven't broken that 462 level since 2022, since March of 2022. So 462. Watch 460 on the SPY. Q steady moving up also. All right, guys. Hey, we got 4.5 minutes left. 4.5 minutes. This timer's a little bit early, but we got 4.5 minutes left. Yeah, get this ready here. Yeah, today is Wednesday. GDP data expected at 4.9%. We also have core retail inventories. Not really a big thing, though, to be honest. Good trade balance, but again, not really a huge release. All right, market new highs 457.40s here, 457.40s. Ric Flair. Yeah, the market's ripping up. Honestly, it's pretty strong. Ahead of GDP, a lot of the time we're sideways too. And so ahead of GDP, we're actually pretty sideways most of the time. So for us to be ripping up so much today is interesting. The liquidity is still pretty low, though. Even if you look at the SPY, it's still pretty light. All right, so CEO of GM says EV sales for the industry in the U.S. are on track to hit 7%. We had German CPI come out lower than expected. German CPI came in at 3.2% versus 3.5%. All right, guys. Hey, we got 2.5 minutes. 2.5 minutes. We got about 1,000 people here. So again, we're going to throw this thing in sub-only mode. If you haven't already subscribed, we appreciate the love. Announce yourself as well. Show us that you're subscribed, team. We appreciate it. Again, a couple last minutes to vote on the poll before we get these numbers out. Yeah, vote on the poll if you haven't already. We appreciate it right at the top of the screen. All right, guys, 2 minutes. This poll's about a minute early, but that's all right. Hey, baby, I got a report dropping in like 2 minutes. I'm not sure. Like less than a week ago. All right, guys. Hey, we got a minute and a half left. A minute and a half left. Yeah, I don't think we're going to be negative today. Again, last time we came in at 2.9%. You know, this time we came in, or we're expecting 5%. Yeah, Carol, worst timing ever. All right, guys. Hey, look at the Q. Push it up to 393s. Right now, 393, still heading up. Yeah, bro. She comes in like right before 8:30. Trash is out. All right, we got the timer going off. Again, we still have 45 seconds left. 45 seconds left. We got over 1,000 people here. Hit the like button. Real quick, let me know your last-minute GDP predictions. What are your last-minute GDP predictions? Let me know. Yeah, I've been up since like 3 a.m. this morning. I haven't gotten, you know. I just got to get my sleep today for sure. All right, guys. Hey, we got 25 seconds. 25 seconds. Make sure you hit the live button next to the play button. Make sure you're fully caught up on stream. I appreciate it. Again, here we go. Let's see how this affects the markets. 15 seconds, guys. 15 seconds. 5.3%, 5%, 4.8%. Yeah, she's very consistent. Again, let me know what you guys think. Here goes the report. 3, 2, 1. All right, here we go. Here's the report. 5.2%. 5.2%. Higher than expected. 5.2% versus 4.9% expected. Again, subscribe, guys. We cover this so quick. Faster than anybody else. 5.2% is what GDP showed up as. 5.2% versus 4.9% expected. Higher than expected. Market seems to like this. It's starting to move up. 5.2% for GDP versus 5% expected, 4.9% expected, whatever you want to say. 5.2% is what this showed up as for GDP data. Guys, 5.2%. Market is pushing up so far. Actually, it's kind of flat. Not really the biggest report, biggest reaction, but 5.2% higher than expected. Again, not likely we're going to hit a recession anytime soon. Q. So market's finally getting a delayed response here, but it's surging up. It looks good. Hey, you love to see it. Market seems to like its soft landing. Yeah, it's definitely better for recession fears. Again, market is surging up right now, 5.2%. We'll see if it hits it or not, guys. 5.2%. My equities portfolio looks pretty good too. Again, this is leading into Tesla's delivery event tomorrow. All right, again, 5.2%. Guys, 5.2% is what the data showed up as. 5.2%. I don't think we have any other data today. Yeah, that's basically the big release. 5.2% is what it showed up as. Starting to get a little bit of a pullback. But yeah, let me know if you guys think it's good or bad. Is 5.2% good or bad, guys? We're going to do a poll right now. Vote on the poll. Is 5.2% good or bad? Is today's 5.2 GDP reading good or bad for markets? Vote on the poll. We'll see how the market responds. Vote on that poll. Let us know how you feel. Again, if you haven't already, check out TopStep. TopStep is a funded account program in futures. If you want to day trade and have no PDT rule, check out TopStep. TopStep gives you a demo in futures. And in the futures market, you can day trade the SPY. You can day trade the Q essentially. You can't day trade them directly, but the SPY is the same price action as the E-mini, S&P 500. The Q is the same price action as the NASDAQ 100. There's no PDT in futures, and you can day trade essentially the SPY and the Q. No PDT restrictions. The most legit funded program is TopStep. They give you a demo, test your skill. If you can pass it, they fund you. If you don't pass it, you're probably going to lose less than you would putting up the money up yourself. I lost thousands when I tried day trading. Most people lose money. A cheaper way to avoid that and to still learn, and if you're good enough and maybe don't have that much equity, you can get funded and keep 90% of your profit once you're funded. So if you get funded, you make 10K, you get to keep 9K of that. They get to keep 1,000 since they're funding you that money. It's regulated here in the U.S. They pay out millions in actual withdrawals every year. They fund thousands a year. It is a sponsor of mine. Great way to help support your boy here. I'll put the link up in chat if you want to help support us. Again, great way to learn day trading with less risk. Don't try to look cool. Try out a TopStep Combine first. All right, market's kind of flat still from this report here. Still pretty flat. Yeah, we're going to get ready to day trade now as well. I think it's bad, especially if the Fed wants the slow economy to keep inflation low. That means inflation will probably spike up again. Maybe. The beige book today. Recession delay again. Good. I would think good, but I can't keep up with that stuff. Yeah, I feel you. So this is bad data. It's subjective, I guess. Real good. New highs before new lows. No for cutting rates. Bad. No recession again, so the best haters can hope for is a recession in 6 months, but it does not look likely. Right. I think that's, in that regard, is probably okay. I think the market's pulling back because of inflation fears. But, yeah, let me see when the next CPI report is. Next CPI report is going to be December 12th. Ooh, man, that's going to be a busy time. The next CPI report is December 12th. The next FOMC meeting is December 13th. So that week, we're going to have CPI Tuesday, FOMC Wednesday. Market's hitting the VWAP there, though. Let's see if this actually holds. It's bad as long as everyone is spending responsibly. Yeah. Market already priced in these reports. I think the market will retrace from here for Christmas Valley. Maybe. Yeah, I mean, the only reason, again, if you hear us speculating on good and bad, conventionally, obviously, the market wants lower, or the market wants higher GDP. It means like a more thriving economy, if that makes sense, right? But when you hear rate hikes, the Fed raises rates to discourage like spending, like to discourage GDP to a certain extent, and so they do correlate with each other some, and so the Fed, when they raise rates, it's a bad sign for inflation. It means prices are too high, and so if you want prices to drop, you need people to stop spending as much, i.e. lower GDP to a certain extent, right? That might be one of the reasons the market's reacting negatively. And it just means the market's still fearing inflation. But at the same time, it's a very small dip. And if we zoom out here, the market is still up a lot on the day, on the week. Very strong market this week. Very strong market the last couple of days. It's the VWAP, Antonio. It's the volume weighted average price. It's this purple line right here. You can see it right here on the cube. Yeah, I don't think we're going to have cuts anytime soon. I don't think we're going to raise rates either, though. I don't think we're going to have cuts anytime soon. I think we might cut next year sometime, but I don't think we're obviously not going to do it this year. We're almost certain to pause in December in the next FOMC meeting. We're almost certain to pause, But again, we'll see. I'm not sure. What do you guys think? Do you think we'll pause? What do you guys think the Fed's decision will be in December? Tomorrow's not CPI, Mo. Tomorrow is what's called PCE. Core PCE is the big one, right? It's the personal consumption expenditure. It's called PCE. PCE is actually the Fed's preferred inflation metric, right? So like the big one that everybody watches is CPI. CPI is the biggest, like one of the most influential ones is CPI. It's the consumer price index. It's like the normal gauge of inflation, but the Fed actually likes to use PCE a little bit more. It's the one like when you read the Fed minutes report or the FOMC minutes report, and also when you listen to the Fed during the FOMC meetings, a lot of the time they'll reference specifically PCE over CPI because PCE is a more watched PCE in the Fed's eyes is a more relevant inflation metric, but it's less watched by retail investors and traders and economists. So, but yeah, PCE data is tomorrow, along with Tesla's delivery day, and then we also have Friday Powell PMI data, ISM PMI data on Friday as well. No, we already got a poll that we just did. We asked, is today's 5.2 GDP reading good or bad for market? 63% say good, 36% say bad. I'm going to guess 25 raise, but I'm always wrong. Yeah, I mean, Tiny, look, you're wrong. No offense. I'm going to just say you're wrong. Maybe I'm wrong. Okay, I could be wrong. It's just so, like, again, what y'all have to understand regarding everything, and you really got to learn to just tune out everybody else, because honestly, most people are wrong on the internet regarding this, right? Maybe not most people, but a lot of people betting against a pause are wrong. Look at this website, the CME Watch tool, CME Fed Watch tool. Okay, you can see the probabilities of potential decisions for the FOMC meetings, right? And this is incredibly accurate. I've predicted the last 6 Fed meetings correctly in terms of what the decision was going to be. But again, that's not really saying that much because it's very likely we're going to go with expectations. It's very unlikely the Fed goes outside of expectations. And if you look at the likelihood of a rate hike, it's at 1.5%. Right, it's at 1.5%. And again, maybe this is the time where we go outside of expectations. It's just so rare. It's so unlikely. We're almost certainly going to pause, and basically 99% of people think that as well. This has actually gone up a little bit since the last time I looked at it earlier this morning. But nonetheless, 99% of people expecting one thing usually means that's what we're going to get. The Fed chooses to be balanced. And again, it's not you, Tiny. It's all love. Like, it's all good. Like, it happens. Like, I'm just kind of trying to help people at home, which is that every time we have one of these meetings, you always have people that bet outside of expectations. They try to make these big, bold predictions. And again, they're almost always wrong. And so maybe I'm wrong here. It could be that I'm wrong. I'm not sure. But I would bet, if I had to bet money on it, obviously I'm going to go with a pause or skip. And again, Tiny, that's a great website. Check it out. A great website to check it. Yeah, no, it's all good, Tiny. Yeah, no worries. Dollar index reversing. Is it reversing up? Yeah, so the dollar index is typically going to do the opposite of what the S&P 500 does, or the SPY, I should say, does. The Dixie's moving up because the SPY's moving down, and if the SPY moves down, the Dixie moves up, and vice versa. That's just kind of normally how it goes. Not always, though, because, again, the market was pushing up big in pre-market, and the Dixie was moving up as well, so they kind of had a positive correlation, but yeah, it's usually just going to do the opposite. Yeah, the Fed's not going to, again, Powell's essentially a politician. Powell doesn't want to cause a depression under his watch, right? And so Powell's not just going to super aggressively raise rates like everybody wants him to, because by doing so, he runs the risk of causing a depression, a recession and a depression. He wants to do a soft landing, which means combating inflation without causing a recession. But if he raises rates too aggressively, he can go all the way into depression territory, right? And so Powell doesn't want that. Powell very much is about balance. The Fed in general is very much about balance. And so the Fed is going to try to be balanced. They're usually going to go with what's expected. They are very, very rarely ever going to go outside of those expectations, because what that does, like if everybody expects a pause and then we raise rates, what does that mean? That's a brash decision. The market's going to react in a negative, brash way, and that runs the possibility of just tanking markets. And not only that, but banks are not going to be able to sustain if they get too many rate hikes. Like the rate hikes are hurting the banks the most, because you have to understand the procedure of everything. The Fed raises rates. By raising the federal funds rate, what it directly does is it makes banking more expensive, and then banks raise interest rates to consumers. And then when interest rates are higher, consumers stop spending. And then in turn to that lack of spending, in responsive to that lack of spending, businesses lower prices, right? So it trickles into combating inflation. That's what the Fed does, is they raise rates. But the banks are the ones that are directly affected by the rate hikes. And there's about a year lag to where we raise rates to when the banks are actually affected by it in any significant way. And so with that, we've raised rates really aggressively over the last few years. The banks really struggled at the beginning of this year. A lot of regional banks failed at the beginning of this year because, to a certain extent, of those rate hikes, right? And so the Fed doesn't want to just destroy banking. They're not going to want to do that. They're going to want to be more balanced with it. And so even if they said, and I know the Fed did say a couple quarters ago that we were going to have 2 more rate hikes this year, but they've changed their tune a lot since then. So originally they were expecting to do, with 4 meetings left, they were expecting to do 2 pauses and 2 rate hikes. Lately, though, if you listen to what they're saying, they're just less likely in that. It's been a while since the Fed went outside of expectations. Right, exactly. Powell already has said multiple times the economy is getting stronger. The biggest thing with Powell, right? The thing that you have to understand, if you want to understand how the markets are going to move to economic data, just to give you some insight into what he said during the last FOMC meeting, right? And this is really important with unemployment and stuff coming out, payroll numbers next week. Powell specifically said the labor market, the jobs market, is more resilient than expected. And he didn't mean it in a good way. Okay, so what he meant by that was that the labor market was too strong. So he has basically said that he wants to push down that labor market, right? He said in order to hit the 2% target over time, the labor market needs to cool, is essentially what he said in some of these meetings. And so an important thing to watch next week specifically is we have non-farm employment change, we have unemployment, and we have non-farm payrolls all dropping next week specifically, right? And so these especially are economic metrics in which if we come in higher than expected for payroll numbers, that's probably going to be seen as a negative thing. Why? Because Powell directly said the labor market needs to cool. The labor market's too resilient. The labor market needs to go down if we're going to hit our 2% target over time, right? And so again, what's directly, reading the labor market? Well, payroll numbers and unemployment. So we might see something in which higher unemployment is interpreted as a positive in the markets next week. We might be something in which lower payroll numbers are interpreted as a positive in the market next week, and vice versa. If payroll numbers come in really high, conventionally that's good. Higher payroll numbers, conventionally low unemployment is good. But if payroll numbers come in really high, again, market probably is not going to like that next week. If unemployment comes in really low, meaning more people working, more people spending because of that, market's probably not going to like it. Again, I'm purely speculating. I might be wildly wrong, but for the same reason GDP coming in higher than expected made the market drop today, is probably going to be the same nuance next week, maybe even more so of that, push the labor market down nuance that we have today, maybe more so next week with payroll and unemployment numbers. But again, let me know what you guys think. See me now as a slight chance of a rate decrease at the end of this year. Very slight though. Overwhelming probability of pauses till spring. Yeah, let me refresh mine. It varies back and forth, especially on these big days. Yeah, I mean, right now I'm still showing 1.5% rate hike, 98.5% pause. So we're now over the VWAP as well. GDP numbers came out higher than expected, better than expected. Right now, the market's down slightly, although it's kind of flat. It's not really a big reaction, I would say. All right, let me see if... Sorry, I'm about to Control-Alt-Delete Quant Tower, which is just frozen here. So it'll let me log it up again. There we go. All right, so we're going to get ready to day trade a little bit now, too. As well, I should say. Again, tomorrow we have Tesla's delivery event, which is a pretty big event. All right. Pulling up my charts here. Okay, nobody listen to V. I'm sorry, V. FEMY, FEMY, is a really speculative penny stock that has a really, really bad long-term chart. You know what I mean? Like, this thing was at in the beginning of 2022, this thing was at $5. It's at $1 now. It looks like a horrible long-term investment. Sorry. I mean, again, people at home have to understand this. Penny stocks are bad investments, right? They're bad investments. Like, most of the time, there's just a lot of, for lack of a better word, propaganda about them put out there. Because, again, like, imagine Jordan Belfort trying to sell people in The Wolf of Wall Street. You know, oh, you could pay your mortgage. You could get rich if you just buy this crappy penny stock. Same thing with a lot of these, right? They're just terrible companies. There's a lot of marketing that has to be put out to talk people into holding them. And almost always they're holding wildly depreciating assets in penny stocks. If you're going to invest, do not invest in companies like FEMY. Again, I'm not trying to be a hater of this V. I'm just telling people the truth, right? I don't think telling people to invest in this is a good idea. This is a terrible company. It looks horrible long-term chart. Yeah, sorry, bro. Yeah, it's the next Apple. Again, I always talk about this, but like Apple doesn't need to talk people into buying the stock. You know, people are going to buy Apple stock. Apple doesn't need to make people feel all warm and fuzzy or promise riches for holding Apple, right? People are just going to do it because it's a good company, you know, and they can see the company's earnings reports and see that it's good. I don't know how many penny stocks I've had people come out that everybody promised that their penny stock was the next big thing. You're basing that off of a chart alone? Yes. Yes, I am. I'm basing that off of this chart right here. Again, man, like, again, I get it. You might be stuck. V, like, I get it. You might be holding this, and so you might be biased in its favor. Again, it's all love here, bro. I hope we can agree to disagree about this. I don't think telling people to buy this stock is a good move. Again, this is the long-term chart, brother. You know, it hit highs at 1375 in 2021. It has dropped from 1375 all the way down to where's my pin thing? Hold on, where'd it go? It's gone from 1375 all the way down to $1 a share in a year and a half, man. That you're telling people that's a good investment, brother. Again, I'm not trying to hate. I'm just saying. I mean, objectively, it looks like a bad investment. And I think telling people it's good is, you know, mostly probably because you're holding it, right? But again, I think people have to understand penny stocks are the single worst investments you could ever make. You know, like even if 1 out of 10 succeed, you're still probably going to lose more. It's just incredibly risky stocks. Okay, all good, V then. All good, bro. What's up, Chris? Yeah, again, you guys got to understand my bias here, okay? Like, my bias is that I've run this YouTube community for years and years, and I've had people come to my streams and really get heavy into pressure, telling people to buy crap, right? If it's a blue chip company, fine. Even if it's a company where they're like, hey, I like this stock, that's fine. But if I look at I always tell people, be careful bringing up penny stocks around me, because if you bring up a penny stock and I look at the chart and don't like it, you know, I'm gonna speak my mind about it, and I'm doing that to protect people, because again, people get talked into buying stuff like this, and they do it because there's a lot of marketing pushing it. There's a lot of people, a lot of marketing pushing it. The problem is that most of these are the worst companies you could ever buy, right? Almost all of these stocks are eventually going to get delisted, go to pink sheets, go bankrupt in one way or another. A lot of the time, even the CEOs of these companies know they're going to fail, and they're the people behind pumping these things up because they're the ones unloading at the top. They're the ones putting out all this sensationalized marketing, talking about how it's the next Amazon, and then they're selling at the top. Even the CEOs know a lot of the time that they're not going to succeed, and they're leaving young, low equity retail traders sitting on losing trades, you know, in the losing shares. So yeah, just again, if you're going to invest, guys, even if you buy 1 share of Apple or 1 share of Amazon or 1 share of Disney or 1 share of Google, you're almost always going to get better returns than buying penny stocks, right? Even if you have small accounts, it doesn't mean you should buy penny stocks. Especially investing in penny stocks is the worst edge niche of the market that there is, you know. Mullen. All right, guys. Hey, we are here. Get ready, team. Oh man, I gotta log in this again. Quant Tower just had an update. Let me see. Sorry, we're getting ready to day trade here at the open, guys. Bear with me. Sorry, I'm trying to log into Quant Tower, but it's just been so long. All right, guys. SPY starting to push up a little bit. Sorry, bear with me, team. I'm trying to get logged in so I can day trade. Q still. We got a little dip to the volume weighted average price. Let's see if it actually holds. Petco just took it to the teeth on earnings. Yeah, I heard that. GDP's already out. Preach. Yeah, I try to help people. Again, the problem is that there's so much marketing for penny stocks, right? Like if you look at, there's so much marketing. There's so much, hey, you can get rich if you just buy 5,000 shares of this 30-cent stock right now. You know, that's the biggest thing is like people just end up losing everything. I don't know, man. All right, I think I finally got in. There we go. All right, I finally got it. Just took some password help. SPY at 457.16. So we got the Q up there too. Cybertruck is DeLorean. Yeah, I mean, again, the delivery event is tomorrow. The delivery event is tomorrow. John, tell me about the beige book. Yeah, so the beige book drops, is it 4 times a year? Or it might be 8 times a year. So the beige book drops 8 times a year by the Fed. And it basically just breaks down like market conditions in all the different sectors and stuff like that. Is basically what it is. So I think it drops 8 times a year. It breaks down sectors. You know, that today, what time is that today? That is at 2 p.m. today. It's not really a big report. It's kind of middle. It's not huge. It's not something that I'm going to necessarily stream. Hey, John, can you talk about how GDP typically affects indexes? I mean, conventionally high GDP is good because it means a more thriving and moving economy. Right now, the nuance of it is a little bit different, though, than conventional because inflation fears over the last 2 or 3 years, especially, like inflation has been really bad. Basically, since 2020, and we started getting checks by the government, and, you know, inflation kind of got out of control after that. And with that, you know, we've kind of been in this market for the last few years in which inflation is bad and we kind of do the opposite of convention. So like right now, GDP coming in higher than expected is reacted to in a slightly negative way. Although the market is up a lot today already, so I think that extension plays a factor in this pullback as well. But it's not reacted to in such a positive way like convention might say. And so again, I think next week, especially moving into it with the Fed specifically saying that we need to cool down the labor market if we want to hit our 2% inflation goal. I think next week heading into PCE tomorrow is relevant, but next week unemployment and payroll numbers are incredibly relevant because, you know, it's going to be a direct reading of the job market. You know what I mean? So like lower payroll numbers might be seen as a positive and higher unemployment might be seen as a positive because the market specifically wants a cooler labor market, if that makes sense, right? So those are things to pay attention to heading into tomorrow. But yeah. No, you can't trade stocks, James. You can trade the Q in what's called the NASDAQ. You know, we're getting ready to trade right now. All right. Here, hold on, guys. Bear with me. But yeah, you can trade index funds like the NASDAQ, like the SPY, in what's called the E-mini, like the price action of them. You can't trade them directly, but you can trade the price action of them. What's called the E-mini, the NASDAQ, the Dow, currencies, gold, silver patterns, and something like that are very similar to blue chip stock patterns. There's just no PDT rule. So you can day trade, short, buy market, sell market, all that good stuff. No PDT rule. And that's why it's incredibly useful, is because there's no PDT rule in futures. It gets you around that red tape of stocks, where if you want to day trade stocks freely, you basically got to have like 30K to day trade freely in stocks, which is not most people. Most people don't have 30K, you know. And so in that regard, it's something like that you need is a way to day trade. Sorry, I'm trying to get Quanta or Top Step working. Top Step's in. There we go. All right, we're in. All right, we're in. So yeah, here's Top Step, and this is the NASDAQ right here. But again, you can kind of see it's the same price action as the Q, in which I can buy market, sell market, all that good stuff. No PDT rule. I can day trade short freely in futures. No PDT rule. I might buy this pullback here a little bit in futures. We'll take one trade. Look, we're up. We'll take one trade. I like the pullback here. I think we could get a little bounce. You can see my P&L right here. We're down $5. And again, I can day trade it just like I day trade stocks, buy market, all that good stuff. We're just looking for a little jump here. All right, so nice little gain. We're up $40. I'm going to go ahead and sell at the top, just lock in that $40. Again, as I said earlier, my goal is to build up a cushion right now. So I want to build up a cushion right now. If I can build up a cushion, great. And then we can take larger risks, try to get funded in some of these accounts. And then we're already funded in 2 of them as well. Man, huge rip. Maybe I should have stayed in this. I like the little pullback zone here. And we got a big rip in the NASDAQ. NASDAQ's over 16K again, which is a pretty big psychological level. Oh, come on, Chris. You know you don't like Teslas, brother. Yeah. Look, it's all good, bro. I hope you're doing well. I haven't seen you in a while, so I hope you're doing well, bro. But let's be real here for a second. You know you don't like Tesla, dude. I know you, bro. You dislike Tesla. You think they're cheaply made. They're not put together well. I understand. Again, I'm not even judging you for that. You might be right. I've never actually owned a Tesla, so I can't really say whether they are or not. I think the Cybertruck looks cool, but I know I'm probably in the minority there in terms of the other people who think the Cybertruck's going to look cool. Yeah, but the Roadster is like 15 years old, brother, you know. Like I raced when I was younger. Like I drag raced a little bit, and so that's the reason I like Teslas is because they're freaking quick. They're fast. What's the Cybertruck do quarter mile? If it does under 13 seconds, I'm going to be impressed. What? Bro. Okay. How can you not like the Cybertruck? Bro, this thing runs 10-second quarter mile. 10.8 seconds. Not quite 10 seconds, but I'm going to call it 10 seconds for point purposes. 10.8 second quarter mile, bro. That is crazy fast, dude, for a truck. That's unbelievably quick. 0 to 60. I don't know, though. This is by supercars.net. Under 3 seconds, 0 to 60, quarter mile in 10.8 seconds on the Cybertruck quad motor. That's incredibly fast, dude. I don't think we can judge it if there's two motors for the same reason you can't judge a V8 twin turbo. You know, quarter mile time is quarter mile time. It's still impressive. Yeah, I think considering how heavy it is relative to the weight, that's pretty fast, I would say. I don't know if we can compare. Again, I'm just saying. Look, people always try to argue against Tesla. Take everything out of there. Right? Take everything out of there. 10.8 second quarter mile is incredibly fast, bro. Incredibly fast. You know, like the Fast and Furious made 10-second stock or 10-second quarter mile time seem like they're just regular. That's a freaking drag car. 10.8 seconds is incredibly quick. Incredibly quick. You know, that's faster than a lot of cars. You'd be shocked at how fast that is if you don't understand. Like, take your favorite Lamborghini. This is way faster than that. You know, so the point is, if to put it into perspective, if a Lamborghini and a Cybertruck pulled up next to each other, the Cybertruck's going to win that battle. 100%. Most Lamborghinis. It depends on which ones, of course, but like most modern Lambos that you're going to see. Most common Lamborghini is a Huracan. I don't know. They might have gotten better. Okay, maybe I'm wrong here. I retract my previous statement. Huracan does it in 10.2 seconds, which is actually really quick as well. I guess cars are getting better. I grew up in the early 2000s. I had a Honda Prelude that did like a 13, 14 second quarter mile, and I was happy with that. Oh, I'm sorry. No, wait. The Huracan does a quarter mile in 13.2 seconds. So all right, so we're in one. We bought the dip here. We might add a little bit to this, but our goal is to build up some profit. All right, so we got a little cushion here. We're going to add a little bit more to this, fix our average, see if we can pop over that really quick, which we just did. See if we hold now. Porsche is more my style. Yeah, I feel you. I like Porsches too. Porsches are really like what I always liked growing up. Yeah, it did more like 14s, but I had fixed mine up a little bit, Cal. So like the fastest I ever ran mine at the track was like 13.9 seconds. All right, so we're probably gonna have to cover this and be down like 60 on the day. Yeah, the H22 Honda Prelude, that's right. That's what it was, 5-speed. right, I'm gonna let this break under this level and then cut it probably. We already got a big cushion on this account yesterday. I'm guessing we test highs on the NASDAQ. I don't know. I'm getting less interested in this trade as time goes on. We're down like $100, 120 on the day. If we crack this low, I'm definitely cutting it. Got out just in time for that. It's kind of a flat couple days. It's interesting because GDP data usually means we're going to have some better results. But kind of gotten beat up a little bit day trading the last few days, which is normal. It might be time for me to scale down my size some. Luckily, we had a cushion heading into that, but like, we'll see. Yeah, a lot of people talk about the Cybertruck looking weird, and I get it, man. It does look a little crazy. Carol doesn't like it at all. Weird is an understatement. I think it looks like a Mars rover, though. I think a lot of people are going to like it. Let's buy right at the volume weighted average price. I heard Hector's going to be running 3 Honda Civics with spoon engines and a Motec system exhaust. Hey, shout out to Hector, bro. You know, you get busted breaking into somebody's warehouse. Who do you blame? You blame freaking Hector. That's who you blame. You know? Freaking Hector. Should have known better, you know? Nobody runs a Motec system exhaust against Brian, you know? Rest in peace. Honestly, my first car ever was an Eclipse, kind of like Brian's in the Fast and Furious. It was nothing like Brian's, but it was the same. It was the same year. All right, so again, we got a little bit of pullbacks. See if we bounce. Q right at the VWAP. Trying to hold. All right, guys, we got 15 minutes. 15 minutes until the opening bell. I haven't seen the Evo Camaro. Do I ever trade U.S. oil? No, not really. I trade oil futures. All right, so market is kind of flat right now. It's been basically flat since the GDP report came out. Hasn't really moved much. You can see the GDP report came out here, mostly tanked the market some. Hasn't really done too much to help it, that's for sure. Still though, the reaction I would say is probably considered underwhelming right now. Underwhelming reaction. Yeah, I saw the $10 million or $10 billion buyback for GM. They're gapping up nicely. They're up to 32. GM really big gap up, like crazy big gap up there too. Is it time for Christmas music? Naturally aspirated V12. McLarens are cool. The only thing though, so like, okay, if you really want a supercar for cheap, the only real option right now is the new Corvette, right? You can get a new Corvette for like what, 70K, 80K, very cheap for a supercar. And I mean, you might not consider them a supercar. What are the new Corvettes? Quarter mile in 11.1 seconds, you know, which is still very quick for a gas powered car. 11.2 seconds, the new 2023 Chevy Corvette. You get one for less than 100K. So we are getting a little flush down here. And honestly, I got to give a shout out to Chart Prime too. So I got to give a shout out to Chart Prime. So we're up a little bit in this next trade here. You can see we're up about 150 bucks. We already took a little bit of it off. Mostly this is from Chart Prime. You know, if you want to know why, I'm using Chart Prime's Trading View indicator service. This is custom Trading View alerts and indicators. My favorite indicator in the world, guys. And again, I don't know if this is going to be available for everybody. But my favorite indicator in the world is when we get a reversal signal and a candlestick indicator right on top of each other. You can see that right here. We get it literally right on top of each other, the hammer, candle, reversal signal. That's what we shorted into. You love to see it. Reversal down, drop, reversal up, bounce. You know, pretty powerful indicators. Look, here's a bullish hammer and a reversal up signal. Nice little bounce. Here's two engulfing candles and a reversal signal. Nice little bounce. This one maybe failed, but the accuracy rate on this has got to be really high, I would say. Look at the bullish engulfing candle right here, bounce, you know. Bearish engulfing candle, sell signal, dip. This one maybe didn't work. But again, when you back test this yourself, like I found them to be incredibly accurate. When more than one shows up at once too. I'm gonna have to get rid of Epic Pin because my Epic Pin's not working right now. How do I close this down? Oh, well, I can't get Epic Pin to work. But when you get more than one engulfing candle and a reversal signal that shows up at the same point in time, they can just be really, really powerful, in my opinion. Now, even if we take the regular Market Oracle off, here's the Market Oracle Pro. Check out this. This works really well for short-term trading. Like if I put a 5-minute chart up, you can kind of see it works pretty legit. Buy signal bounce, sell signal drop, buy signal bounce. This one may be wrong. Strong buy signal work, sell signal work, buy signal work, sell signal work, buy signal work, sell signal work. Buy worked, strong sell signal worked, buy worked, strong sell signal worked, buy worked, strong sell signal worked. And again, you can back test this yourself. Everything's not going to work every time. Nothing is. Nothing in life is that way. But when you back test it yourself and really calculate it, this can be a powerful tool as well. You can also put up regular chart patterns. You can put up their new screener. So it'll tell you, I can input different stuff on the screener and it'll tell me what's working at any given period of time, what's in a trend at any given period of time. It's just incredibly useful for trading. Let me wait for the screener to load. They also have their new back tester here, which actually lets me input different criteria and back test things. I think you can only get it if you have a lifetime subscription. I think that's the only people who can get the back tester currently, but I think they'll update you more. But look at that last strong signal, buy signal, huge bounces, and we haven't really stopped it since. So like, look at the screener will actually tell you, I can input stuff into the screener. So I can put up, the SPY, whatever I want, and it'll tell me whether it's in a trend, whether it's actually confirmed it, where the reactor shows, all that good stuff on the screener. And then the back tester, anything over 50% is a legit strategy if you test it. But I can also input it this way where I can say, I want to, candlestick patterns are working really well according to this. But I want to look at both strong and regular strong signals and then use a dynamic sell. That's the one that usually works the best. So using both strong and regular and then seeing which one works the best in that way. But it'll show you what the percentage is and you can kind of test it yourself. All of it's really useful. It's like $50 a month if you use my link. And so this is something that I use pretty regularly in the background, but they are a sponsor of mine, of course. So I'm definitely biased in their favor because they're a sponsor of mine. But if you want to check them out, again, I can't guarantee you're going to make money. Of course, nobody can, but I find them very useful. Running out of screens here. There we go. There's the link. All right, so Q starting to bounce up a little bit. E-mini bouncing up a little bit too. Brain, because you can do both. You know what I mean? Like, nothing's gonna work well for you to just, make billions of dollars. Nothing in life is that easy, but the amount of people that use Chart Prime is not going to influence whether the systems or strategies work. You know what I mean? So it's just software. It's custom trading indicators for the same reason the volume weighted average price works. And somebody might teach you about the volume weighted average price and you can say, hey, well, why don't you just trade the VWAP? Because you could do both. Smart people in the world typically diversify. They don't just stick with one thing or one source of income. Most smart people diversify sources of income. And that's when you truly find success. So it's not just a binary thing. Like you have to do one or the other. You know what I mean? I believe so, Quality, although I'm not 100% sure, but I believe so. All right, guys. Again, market's very flat right now. We're just kind of waiting for it to pop out of this. Market opens up in about 6 minutes. Might ask Santa for it. The man. And yeah, again, guys, if you're mad at me for having sponsors, cry about it. Like, listen, we tell people directly, hey, yo, we're biased because they pay me money, and I'm probably the only person that you'll see on YouTube do that. So if y'all are upset about that, y'all are just looking for reasons, and that's okay. Listen, if I had to stare at somebody as handsome as myself, I might get mad too. We got a bunch of chargers here, Chris. I went to Walmart the other day and there were chargers sitting there. So, I don't think charging is really as big of an issue. I think anytime, I've talked about this argument before, but I think electricity in cars is the future. Like, electric cars are the future. I don't think it's really arguable. I think they're obviously the future for a lot of different reasons, mostly because they're more efficient. They mesh better with technology. They're faster, of course. the autonomous driving is going to be a huge selling point of these vehicles, right? So like the fact that within 10 years, cars are going to drive themselves to a certain extent. Well, and cars already drive themselves right now, but over the next few years, it's going to get more and more efficient. And over the next decade, cars are going to purely be driving themselves to a certain extent. A lot of them are. And I think when one company, probably Tesla, executes that well, other people are going to see that convenience and they're going to want it, right? And that's going to make a lot of people gravitate towards EV versus gas powered cars. You're still going to have gas powered cars, but I think that's obviously the truth. They're faster, they're more efficient, they mesh better with technology. All of those things are, I think, in my opinion, very obviously true. And so what you get is anytime you're on the forefront of a new technology, you're always going to have speed bumps, which is kind of the argument for like charging and having to wait for them and all that different stuff, right? But it's not a big of a problem as people think it is, because the only real people that are running into charging problems are people that are traveling long distances. You know, most people that buy Teslas charge them at home and they charge them overnight, you know, and yes, if you don't own a home, that's a bigger problem. But again, you know, it's just kind of is what it is right now. But most people that have them charge them at home. And so what does that mean? That means that most people charge their cars overnight, and then when they wake up, they've got 300 miles to drive it. Most people don't drive more than 300 miles in a day. And so again, it's just not as big of a problem as people make it out to be. Sure, if you're traveling out of state, you got to sit in line and wait and all that stuff. But again, it's just not as big of a problem as people make it out to be, in my opinion. But again, everybody's different. You know what I mean? Let's look at the NASDAQ here. I see the NASDAQ start to rip up some. But we'll see if we get anything good for market action. After GDP dropped, it's actually been kind of quiet. So we actually haven't had that good of results here since GDP dropped. It's been pretty boring and neutral. Not a lot of good price action, I would say. And so we'll see if the opening bell can give us a little bit better price action right now. SPY's still moving up. Yeah, I mean, again, back roads are going to be a problem for sure. Oracle of Omaha has a beautiful plan to advance that process too. Yeah, again, I'm not even saying we're going to do so and it's going to go smoothly. I think anytime you're on the forefront of tech, you're going to run into problems. But I think over time, those problems are going to subside. I think over time, it's just going to get easier and easier to have them. Yeah, the handsome thing, obviously I'm being sarcastic, you know. And so you got to troll the trolls. That's the only real reaction you can give them is sarcastic reaction. You know, if you get upset with them, you know, you let them win. If you let it bounce off of you, they end up just looking weird. You know what I mean? Anyways, we got the opening bell in about 2 minutes, guys. 2 minutes. Market's been kind of flat. Like, look at the NASDAQ here since GDP dropped. Bro, freaking my epic pin. I want to be able to draw stuff, but it won't let me. Where'd it go? It's the internet. Yeah, hey. Yeah, I mean, we're on the internet. Some people create fake name after fake name just to poke and troll at me. But yeah, according to them, it has nothing to do with jealousy or insecurity on their part. You know, nothing to do with it. All right, there we go. I can finally draw again. Look at this. Top 3 circles in the world right now. Again, market's really flat, though. Up, down, up. Are we going to break out of this at the opening bell? What did the market do? The market was green yesterday, right? We might have some Fed speakers today. Nothing's really big. It's not like the biggest members are going to be Powell speaking. I know we have some speaking today in this week overall, but none of them are super big. The biggest one's going to be Powell on Friday speaking. Yeah, so yesterday we actually had a green day in the market, and then today, or maybe this is today. Yesterday we actually had a red. No, wait. Yeah, yesterday we had a green day. Fed speakers today are, let me see. Here's the opening bell, guys. We got Fed President Barkin speaking on TV at 10. We're not going to cover that, though. We got Meister speaking at 1:45, Beige Book at 2, but that's it. No, sorry, guys. Let me get these drawings out the way. All right, so NASDAQ pushing up again. Yesterday, the NASDAQ pushed up pretty heavily at the opening bell. And again, the market's gapping up again today as well, though. So a lot of people are watching the market to see if we get more bull action. All right, so Q pushing up, SPY dipping down a little bit, but the NASDAQ, big bull action here. Yeah, PCE data coming out today is pretty big too. All right, so big NASDAQ pop. We're going to see if we get more bullish action. I'm looking at my equities portfolio. It's doing really nice this morning at the open. Really nice. Hey, thank you, Marcus. What time is the data? Data's already out. It might be right below me. Could be. Might be. SPY testing highs of the day right around 457.60s here. 457.60s. The Q right at 393.30s. Just broke highs in the NASDAQ and the SPY in the Q. So now we got a little dip. We might be able to target this dip here if we can. It retraced too fast back up. So, and again, I'm okay with this. My equities portfolio is looking really good. All right, too much bullish action for me, though. I'm going to wait and see if we can catch a range instead. So my hands are kind of off at the open. All right, so big upward movements at the opening bell here, team. I'm just kind of hanging out right now, though. I might take a little bit off of Honeywell. I'm up a lot in Honeywell, so I'm going to go ahead and lock in some profit here. Again, average price on Honeywell is 189.30s. It's at 196 this morning. So we're going to lock in some profit. Took a little bit off there. Lock that in. Might as well. Market's ripping up on us. So that's good. MGM. Took some off in Honeywell. Still in Home Depot. Google's still performing really well. Ford is actually up some today, so that's nice. Etsy's actually getting closer to green on that one too. Amex are still up. Citigroup are still up. ARM, we're getting close to green on that one too. AMC's even up today. Apple, we're still up nicely. We've been up in that one though. Snapchat, we're pretty green in. Might as well take some off in Snapchat, right? We're up a lot in it. Takes half off of the trade. Wait for our equities trades. The market's just surging up though. You love to see it. All right, so NASDAQ has not had one red candle since the opening bell. You can see it on the Q, which is the same NASDAQ price action. Q up to almost 394s right now. New highs of 393.93. That's the high of the year. NASDAQ just broke the high of the year. The Qs just broke the high of the year. And again, 393.93. This is mostly tech. Lifetime high of the Q is only at 408, so we're reasonably within that potential range here for it. Yeah, I heard about the Santa Con thing where everybody's going to show up and all right, so again, we've got a lot of upward movement here, I'm kind of slow and steady here. I don't want to push too hard right now. So we got a big upward movement here. I don't really want to buy. We're too extended on the upside, although I do think we're starting to really rip. So the Q almost up to 394s right now. Q is very strong, very strong. We're going to take a little bit off in Coca-Cola as well, since we can. Up pretty big in that one too. Again, SPY's starting to dip. The NASDAQ is dipping less here. So the NASDAQ's pulling back less. Walmart looks weak today. I'm in Walmart, I believe. Yeah, I'm in Walmart. It's down some today. We're slightly red on the position though. It had a big pullback. I didn't even realize. I mean, it's a small position. My average price is 159, so we're at 158 for Walmart. So, man, NASDAQ's still churning up here. Over 394s on the Q. The regular NASDAQ is up to 16.2K. Still ripping up in everybody's face right now. Again, I'm just kind of sitting back waiting here, team. This looks like a strong momentum move. And look at that support level we drew, which is really just the high of pre-market. Look at where the SPY bounced directly off of that level. Again, I haven't really been super active trading. I don't know what we're going to get here. So Big rips. SPY starting to get towards highs. Hold on. Make sure this is the right one. Okay. Ouch. Dude, these AirPods are freaking weird, dude. I'll get like a burst of like static in my ear from these, man. I don't know if these are necessarily good for me. Put this up here instead. There we go. Let me put the headphones back on so you guys can hear it real quick. There we go. Yeah, doesn't Neo have earnings pretty soon too? When are Neo earnings coming out? All right, so now markets are starting to dip some. We got a little down wick in the NASDAQ. I'm going to buy this. See if we can ride it up. There we go. Big rip. Go and lock that in quickly here. We buy it again down here. All right, so we bought it again. Sold another rip. Got a little flag pattern forming, I think. Depends on if the NASDAQ starts to really rip up in everybody's face again here, though. Neo earnings are next week. Yeah, I thought they might be this week, but I used to be a bigger believer in Neo. Neo looks sketchy lately, though. The problem with Neo is that it looks weak. All right, so we're now shorting a little bit of the market. We're shorting the E-mini right now, covering. We're up about 100 on the rest, cover half of that. Just go and lock the rest in. So we're up 207 on this account. We lost a little bit in another account earlier, though, so we're kind of switching accounts. Rivian's all right. I don't mind Rivian as much, but again, it's very subjective. Like Rivian has Amazon backing it, so I think that gives it a little bit more validity. The problem with most of these up and coming EV brands is that they just don't have enough people that actually care enough about them to buy them. Like you just don't have enough people that are actually buying these EV companies to really make them succeed. Like everybody was all about it with Mullen, and I told everybody Mullen was crap. Why is Mullen crap? Because you don't have enough people that actually care about it to buy it. Like you got to think about it. Take yourself outside of the stock market and imagine if you had never heard of Mullen before. Are you going to freaking buy one? Of course you're not, you know? And so I think that's the case with most of these EV brands is that they simply do not have enough people that are genuinely interested in buying them up. They just don't have enough people that are genuinely interested in buying them up. You know what I mean? So with that, like most of them, a lot of the up and coming brands especially are going to fail. It's not really an arguable thing. Most of them are going to fail. Why? Because they don't have enough consumer base interested in them to make them succeed. You know, definitely not something like Mullen, right? The only people that are really getting behind Mullen are retail investors with small accounts that don't know any better. They don't know how to recognize sensationalized marketing, you know, and they want to get rich quick, right? And they think the way to get rich quick is to buy crappy penny stocks and hold them, but that's usually the way to get broke. All right, so again, we're scalping a couple more on the S&P right now. We just accidentally took too much off, but that's all right. We ended up making a bunch before we did. We are now up 360. Yeah, I don't know about like a lot of these, like, you know what I mean? I think anything could happen with them, but I think there's also risks that you got to be wary of with them. Some of them are going to succeed because it's the new technology. We got a nice little bull flag here. I'm gonna buy this at this little low point, and we have a cushion on the day, so we might add a little bit in trade and risk the cushion that we have currently on the day in this, since we got a really nice bull flag look here. We might not need to, I guess. I wish I would have added more to this, but it's all good. Maybe I can let myself get into the green and then add some more, take a larger risk trade already in the green. Two good risk management scenarios in one, but yeah, what I mean by that is we already have a really nice cushion of like almost 400, and so we can use that to take larger risk. I'm going to add a little bit more to this now. Let's see if we get a big pop-up that we can sell into and lock in half. There we go. I'm going to take half of that off. Just locked in some more. We get a little bit more here. 20. Take a little bit more off there too. All right, so we got out. We are now up about 450 on the day, give or take. Gonna start taking some larger risks now because we can. I'm gonna buy this little pullback here and maybe start adding up to 3 contracts here if we can. There's 2. Took half off there. Took another half off there. All right, so now we're up to 600 on the day. We're a little bit too close to the top of that range for me to do anything else here, so I'll probably just sit. And again, using these type of risk management systems is how you get funded in these funded account programs. Again, you build up a cushion, you take larger risks once you have that cushion. If you're unable to build up a cushion, you trade small until you can, and if you can't, then you just walk away down a couple hundred and, you know, have much bigger winning days than losing days. Top Steps funded account program is the best place to try this on. There's no PDT rule in futures. I'm basically day trading the Q right here. You can see it's the same price action. There's just no PDT rule on this right side in futures. I can buy market, all that good stuff. No PDT rule. They pay out millions every year in actual withdrawals, fund thousands of traders a year. Great way to learn day trading with less risk. They give you a demo. They test your skill. If you could pass the test, they fund you. If you can't pass the test, you're probably going to lose less than you would putting up thousands yourself, risking that. And again, they are a sponsor of mine, but a great way to learn. You can check them out. They're the most legit funded program in the world. We got a double top. I'm going to buy this dip here. We have a nice little cushion on the day, though. So, like, we're going to start it off with 1 contract here. Maybe add up to 2. Maybe not need to, I guess. And we're going to add up to 2 there. We got 2 contracts. And we're flat. I just don't want to get a big drop here. I mean, we're still going to be green even if we cut it right now, but I'd like a retracement, of course, back up. I don't like this, but I'm going to get out here and just take a small loss. And we got out a very small loss. We're still at basically 500 on the day. I just don't trust this right here, even though it looks all right. Maybe I'm going to get faked out in my face here, and that's all right. But we're a little bit safer. See the S&P 500 E-mini does too. No, I'm not going to SantaCon. I got a wife and kids, man. I got a family. I just don't have time to go to SantaCon and dress up like Roaring Kitty. No offense to you guys. I mean, do whatever y'all want to do, but it's not really. Not really a priority of mine. No offense. I mean, I'm in AMC. I hope it goes up, but you know. Right, so maybe my exit there was the right move on the NASDAQ. All right, so we got a little pullback. We're kind of back to the support level. We'll see if we bounce off of this or what happens here. There's the support level. Rivian is still looking pretty strong. My portfolio has been basically in the same spot every time I look at it for the last couple of minutes. Sheesh, dude, my hands hurt. Yeah, I mean, some of the cons look good. Like, I'd like to go to the trading card ones, but SantaCon's not really, not really something I'm gonna want to go to. No offense to anybody that does. It's just not really my thing. My kids might like it, but to be completely honest, a bunch of grown men dressed up like Santa sounds like a nightmare to me. My son was always kind of sketched out by Santa, and so I couldn't bring him because he's gonna freak out over there. It's like a nightmare to him. And for me personally, I mean, I like GameStop. I hope GameStop goes up, but I'm not gonna go to SantaCon and dress up like Roaring Kitty. You know what I mean? All right, starting to get some upward movement in equities, though. All right, SPY starting to rip up some more here, team. Will it continue? He's trying, just broke highs, got up to 458. Usually I don't dress up as Santa. Usually I dress up as the bodysuit from The Christmas Story is usually my go-to move for the holidays. So I'm usually the pink bunny in A Christmas Story. Ralphie's aunt's present to him is usually what I am. Can we put our money together and make you wear a Santa suit? Yeah, I mean, listen, y'all donate $1,000 to me by Christmas. Y'all are gonna have to pay to see that. I'm telling you, and I don't really want you to. I'm just kind of joking, But yeah, capitalism thriving over here. Equities portfolio is looking good though, man. Hopefully it keeps it up. We have been kind of scalping in the background here. Here's my portfolio today. We're up about 730 in this one. Mostly thanks to the SPY rip up. We just cut most of it off. Mustard spins, yeah. So, I mean, we're up really big using that same risk management system. We built up a small cushion, and then we start to take larger risks once we have that cushion. Again, if you want to try it, check out the link in the description. Also, check out Chart Prime. Chart Prime is one of the reasons I'm having decent success today. You know, we called another hammer reversal down symbol not too long ago. And another one that we've been using. Let's see if we get out of this range, though. Look at the SPY at 458. SPY is just churning up. I ended up selling. Maybe I'm getting a little bit of FOMO now. Maybe I shouldn't have sold. But yeah, another one of my Chart Prime indicators. Look at the strong buy signal that came in way back here. On a 1 minute chart, these can be powerful. Like, look at the strong signals. Like, look, this is Chart Prime. Look at the strong ones. Strong signal here. Look at the follow through. Strong signal here. 1 minute chart. So look at the follow through. Strong signal here. Look at the follow through. Strong signal here. Look at the follow through. I can't guarantee it's going to work. Of course, they're a sponsor of mine. You can check out the link in the description if you want more info, but genuinely useful for me. Again, I'll see you guys later, though. Y'all, love you all. I'll be back tomorrow. Tomorrow is actually a much bigger day than today. Tomorrow we have PCE and jobless claims unemployment filing. So PCE, jobless claims unemployment tomorrow morning. Be ready for that. I'll see you guys later. Y'all be safe. Good luck. Y'all be good. I'll see you guys tomorrow bright and early. Again, will the market close red or green today? Let me know in chat real quick. Let me know right now. Will the market close red or green today? Will the market close red or green today? Let me know. What do you guys think? Again, if I look at the poll that we did here, we asked people, is 5.2 good or bad for the markets? It looks like the market actually reacted positively. It might have been a little bit of a delayed response. You can see we got 640 votes. 67% thought that we'd get a good reaction. 32% thought we'd have a bad reaction. So, I mean, hey, like, we're not doing that bad. It could be worse, you know, for markets today, guys. And so, again, y'all be safe. Y'all be good. Again, my equity portfolio is doing all right today. We're up like 200 plus in equity, so that's nice. But, again, let me know what you guys think. Y'all be good. I'll see you guys later. Green, I don't know. Green. Hey, I appreciate the I don't know. At least it's honest. I'll see you guys later.